Hello, good morning, everyone. My name is Anthony Wadi. I'm the technical committee of Ican Lagos Mainland District Society. You are welcome to our webinar for the month of May. Please, our chairman will soon join up with you. We will start by 9:50. Just bear with us. You are welcome on board. Thank you very much.
Good morning.
Good morning, sir.
Yes, sir.
Good morning, everyone. Good morning, everyone. Hello.
Good morning.
Good morning, everyone. Can they
Good
hear me?
morning,
Yeah.
sir.
Good morning. Good morning. Good morning.
Yeah. Good morning. Good morning.
Yeah. Okay. Can the technical team kindly switch off the music now once we start?
Just man.
Thank you very much. Good morning, everyone. Thank you for attending our webinar. That is the Institute of Chartered Accountants, Lagos, the Lagos Mainland District Society, the webinar presented. You are welcome. The theme of this workshop is understanding private equity, venture capital, and digital capital transformation in finance. You are all welcome. Thank you for everyone for coming. I want to use this opportunity to quickly introduce our district chairman, Mr. James Ini Iso, to quickly give the opening remarks so that we can quickly hit the ground running. The first speaker is already set. Mr. Ini Iso, please, can you just have your opening remarks so that we can start off the program immediately? Thank you, sir.
Good morning, my dear professional colleagues. Good morning, everyone. I want to believe I'm being heard, even when I know that most of the participants are being muted. Yes, this is being done intentional, at least for us to avoid the noise, the background noises at wherever that we are, since most of us might be joining from our offices or wherever that we are. I appreciate you all. Thank you all for coming or joining us for this participant. As at now, I can have up to like 55 participants on ground. And as the technical secretary have said, yes, we are set, and the paper, our facilitators are all on ground as I speak right now. I will not want to take much of our time. Let me just go straight to my opening remark. I'm going straight to my opening remark right away so that we might hit the ground running. Thank you so much for this. This is my remark. May I, on behalf of the Executive Committee of Ican Lagos Mainland and District Society, express appreciation to Almighty God for making this webinar possible as scheduled. I hereby also express our gratitude to our facilitators, Mr. Lumine Lawson, CFA, FCA, and Dr. Oshadare Shegun, FCRB, FCA, for their support to making this training to come alive. Let me at this time extend appreciation to the members of our districts and all participants who have registered for this training. For without your support, this training will not hold. I say thank you very much for participating. In the dynamic world, you will agree with me that today's need continuous updates of their knowledge with topical issues such as private equity and venture capital, digital transformation in finance and accounting. Thus, this webinar on above-mentioned topics was put together to expose participants to key issues of the subject and also improve the knowledge of professionals and stakeholders. Private equity and venture capital cannot be overlooked by any firm of today that specializes in creating wealth. We will share knowledge on the best strategies for attracting investment and evaluating startup capital and its financial reporting challenges in private equity-backed organizations. In this era of artificial intelligence, digital transformation in finance and accounting cannot be overlooked. This will enable one to analyze the impacts of automation, artificial intelligence, blockchain, and data analysis on financial reporting, the audit practice, and advisory services thereon. The issue of transparent communication of efforts to mitigate environmental risk, promote social welfare, and uphold governance standards, thereby demonstrating the company commitment to sustainable business practice and long-term value creation. This webinar will dwell on the following topics. 1, private equity and venture capital, with key focus on strategies for attracting investment, valuation of startup, and financial reporting challenges in private equity-backed firms. 2, digital transformation in finance and accounting, with the key focus on the impact of automation, AI, blockchain, and data analysis on financial reporting, audit practice, and advisory services. Our resource persons are thoroughbred professionals and will bring their immense knowledge and experience to bear on the subject so that at the end, participants will be happy for registering for this webinar. Please relax, be attentive, and feel free to ask questions from the resource persons. On these notes, I declare this webinar open. Thank you for listening, and God bless you all. My name remains Ini Iso, the chairman of Ican Lagos Mainland District 2024-2025. Thank you so much for listening. Technical Secretary, over to you, sir.
Yes, thank you very much. Our speaker is here, and I'm just trying to locate him. Yes, I'm trying to locate his line. I want to ask him to unmute so that he can come on board. Thank you, everybody. We will kick off the first paper right on time, Mr. Chairman. Thank you very much. The first paper will kick off at 10:05. Yeah. Okay. Okay. Okay.
Good morning, everyone. Can you hear me? I hope I'm audible.
Yes, you're audible here. You're audible. Go ahead. Okay.
We can hear you, sir. We can hear you, sir.
Okay, yeah. Okay. So, Mr. Lumide,
Okay.
Go ahead. If you have any question, you can put it on the chat. I will handle that, please. Go ahead, Mr. Lumide.
Thank you very much. Good morning, everyone. I'm very honored to be presenting at this event. My name is Olumide Lawson, as has been presented. I think for me, I'm very excited to be speaking about venture capital and private equity. That's probably what I've done in the last how many years? Probably like 15 years, And being a finance an accountant myself, I've seen the value that financial support, that what our profession can bring to the space of private equity and venture capital. So I think I'll just go without much ado. I'll go to the presentation. Please, the next slide. So what will I be speaking about today? So I think for me, I think more than anything is just really sharing my own experience in the space of private equity and private and venture capital, just to let you see from my own perspective, why I think that space is important and has been important and is probably going to be very critical in the years ahead. I think I will spend a lot of time on that. I'll also try to spend time to share how I think we finance professionals can bring value to that space. I've seen where the gaps are, and I would see is where there are gaps is also where there are opportunities. So I'll also be sharing, how I think we as financial professionals can bring value. I would tend to speak more from what I've seen, less from perhaps theoretical data and things like that, but what I've seen. If time permits, I did a small case study because I always joke that all of us are, apart from being finance professionals, we are probably investment professionals by heart. So I put together a case study, just one to see what a typical private equity type transaction will look like, a simple one. And then two, as finance professionals, how what we do to address some of those issues that that a typical a typical business, and business owner would face. So, the next slide, please. Now, there was a study that was done by the USAID. I think they spoke to about 75 businesses generally, and just to understand what the key challenges when it comes to investments in Nigeria. People that have done investments in Nigeria in the private sector, and the top, with understandably so, the top challenge is infrastructure. I don't think anybody will be surprised if you done business in Nigeria, if you have to try and make your own water, your own power and things like that. So the number one challenge when it comes to business in Nigeria is infrastructure. The immediate number two is finance, and very many people have brought the challenges of finance, where their businesses have not been able to progress as well as they would have loved, simply because they did not get the kind of financial support that they need. Of course, with time, I've seen that many people, in a way, exaggerate the value that finance brings, because many businesses have inefficiencies, they have other challenges that perhaps, that if they can resolve that, they may not even need as much finance as they require. But there's no doubt that issue of finance is a very major challenge to many businesses. The next slide, please. Now, so the difficulty for most SMEs is that SMEs and SMEs, small and medium-sized enterprises, they now face even an additional layer of financial constraints. They are seen as the more underserved sector. And what is the reason for this? First of all, the funding gap, it generally is seen as in Nigeria, is seen about $32 billion. Of this gap, is many of the funding options available are mostly to the very large businesses, the the blue chip businesses of this world. They get probably all the a lot of the funding that is available. Because most of the commercial banks, most of the financial institutions are looking for fairly safe businesses. So they are supported by those. Now, for the very small businesses, the micro businesses, so not most, but quite a number of them get support from the microfinance banks, people that need 1 million naira, 3 million naira, and things like that. So the big question is, who then is supporting the SME space? I think that is where the real question that has caused, and not only in Nigeria, worldwide, that has caused the birth to institutions that might be able to support this space. And just in terms of numbers, it says that it's assumed that 96% of total business in Nigeria, that of the SMEs are they account for about 96%, but they actually get just about 1% of the commercial bank lending. So this just points to the amount, or that means 99% of the lending goes to the blue chip. And I'm bringing this up just to make a case that this financial need by SMEs is actually a real issue. The next slide, please. Now, so in a way, if you think about it, it's not that many of those companies, they hate SMEs. What has happened is that for many of these SMEs, they, just because of the way they are structured, is made it either difficult or impossible or risky for the average commercial bank, the conventional finance institutions to support them. And why? Most SMEs have very low asset bases, very low collateral. The way that you're going to get your money back is usually very, 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 very slim. And because of this risk, there is so much, the cost of transaction is very high. Many of them have inadequate, incomplete books. Many of them probably don't have audited accounts and things like that that will even give you comforts. Most of them don't have steady cash flows. The informal, because you can imagine for many SMEs that the owners are, maybe the owner is the MD, is the accountant, is the this, is the that, or him and his wife, or him and his brother. So the business format, the business structure is usually very, very small. Then they usually have high cost of borrowing. And most of them, of course, because of their size. I'm still on the previous slide. Can you go back to? I'm still on the previous slide. Yeah. And then in terms of geographic restrictions, simply because of their inability to get the funding they require, they are limited to maybe a particular state or a particular area, both in terms of their customer base and in terms of their operations. So maybe my own question to us on this group is that, assuming you have your own money, you have funds in your pocket, and then you meet a company that has all these challenges, how many of us will be happy to give our hard-earned cash to this kind of company? That's of course, I don't think every company will have this, but just assuming that one meets a company that has all these issues, so in a way, this points to, why it's challenging for SMEs to get funding, and also why it is challenging for service and fund providers, financial institutions, to give them funding. Obviously, they don't want to lose their money. Now, please, the next slide. I'm going to speak to what might be a solution to help some of these financial institutions, some of these business owners, these businesses that have some of these challenges. But before then, just to be sure we are all on the same page. Although I'm guessing that this might be very obvious to many. I think it's important for me to distinguish between equity investments and debt investments. So, speaking very, very loosely, there are two main types of funding that can go to businesses. Of course, for the more sophisticated ones among us, there are more than two. There are blended ones, but speaking very loosely and speaking very generally, let's assume for the purpose of this that there are two. The equity investment. And equity investment is basically just buying, you know, shares, buying ownership in a business. So at the point of buying those shares, you're actually buying you are a co-owner of the business, which means that their success is your success, their failure is your failure. You can make a lot of money and then you can lose a lot of your money. So given this reason, the kind of thought process that goes into your decision to invest equity or shares in a particular company will take a certain way, which is probably what we're going to discuss a lot today. The other is debt, or loans, and for this, it's a different, this one, you're not investing in the ownership of the business. You are believing that you are giving them money and you are believing that they can pay you back the money, you know, most likely with some interest. And for that, again, for this reason, the kind of thing that you look for is not what someone that is living investing shares would do. So like by people will say, so it is one of those things that the boss sells, the boss doesn't sell, the owner, the money of the what's it called? Is a wheelbarrow carrier will be complete. So I don't want to speak Yoruba just because of the non-Yoruba speakers, but of course at the same time, you also there are some certain things that you need to check to be sure that this company is even worthy of a debt investment. So those are the two main areas that investments can work. So I just want to put that on the table. Now, please, the next slide. So we spoke about these businesses that have challenges, and simply because they have all these problems, they don't have cash flows, irregular cash flows, they don't have asset bases, and they don't have things like that. Now, what kind of instrument, what kind of system, or what kind of structure can help these people, And I think that is where the idea of private equity comes in. And I'll do a distinction between private equity and venture capital in a while. So what private equity does is to identify those kind of businesses that almost like what people will call almost like this rubble in the mud kind of a thing, that businesses that have been around, they've been doing okay, but you see that with the kind of support that they need, they can actually do substantially well. Now, when you're coming to this kind of business, you're coming because they may not have, like I said, they may not have the collateral or whatever, but you're coming because you believe that with the kind of support this company can make, you probably can double or they can double or triple or quadruple their value, And for you as a business owner, you have a choice. Either you want to be king, where you own everything, you know, where you know that there's still value, but you want to say, I'm going to be the one to own everything, or are you open to where you can sell part of that business to somebody else, and especially somebody that can add value, that can help you to get to where you want to get to, So what private equity does basically is taking that responsibility, taking that risk that you make money when I make money. Or rather, I make money where you make money. I lose money if you lose money. So because of that, I will work hard with you to be sure that you make valuable decisions, you make money, we put in the structures so that your business is profitable. Please, the next slide. Now, so to do this, what does this process work? And please, because we are financial professionals, please, I'm as well as I'm going through this. I would also like you to look at it from from a professional hat, just to be because I think even looking at this, you might be able to see again where some of the areas that our work might be able to add value. You know, first of all, is somebody would have to identify that indeed this is the kind of company that we want to invest in. You know, and what I do many times when I'm trying to take this decision is that I ask myself that, assuming it is my money, the money in my bank account that I want to put in this business, can I put my money? Is this a kind of business I want to put my own money? Let's even leave all the financials aside, So I sit with the promoter, understanding what he's trying to do, even hearing it from him, how does it plan to make money? Does it even make any sense? I'm also in Nigeria. You want to serve Nigerians. Does it make any sense? Would I buy this business? Would I even support what this person is trying to do? So I spend that amount of time understanding it from a money in my pocket perspective. If that works, right, I just say fine, I'm willing to put my money in. So I now take it fine. Let us now begin to gather information. What have they done before? What are they planning to do? How does this tie to other people that are doing it? Typically when you're doing this, you need to get their financials. You need to get get all the audited accounts, even speaking, they've done the business plan before, understanding what the business plan is, what the projections are. After all this is done, you present to your investment committee or whoever is in charge of helping you to even review your investment decisions. Now, at this point, you're just basically just speaking to what they have told you that they are planning to do. And also the account that they have shared with you. You have not verified anything. Based on your initial findings, the investment committee will probably say, well, we like it, or rather, let me start from the we don't like it. This does not make any sense. You did not look at it from this perspective. Please throw this away. But most times, what will happen is that they will let you know the things that if you could verify would make sense, or areas that if you go and check, you can confirm indeed whether this thing is exactly the way they have said it. Oh, somebody is. Did I just hear that my voice is not clear? Sorry, please, Anthony, can you hear
Yes,
me?
hear
yes.
you well.
You
Can
said
hear
your
you
voice
very
is
well.
not clear, but I can hear you very well. Maybe it's the
We
person's
can hear you
network.
very well.
Another person has confirmed to say they can hear you very
Okay.
well. Go
We
ahead.
can hear you very well. Go ahead.
Okay. Thank you very much. Please, can you go back to the previous slide, please? Please, can you go back to the previous slide? Yes. So I'm still on this one. So based on some of these conversations, we now come up with what you call a due diligence plan, which is that we want to do this business. What are the things that we need to check? What are those tires that we need to kick? At this point, we now have to many times because the truth is that many investment professionals are not as good as they would have loved in finance, accounting records, and co. So we now carry out what we proper a due diligence plan. Which usually covers legal. What do they own the land that they say they own? Do they own the property that they say they own? Who are the businesses registered and all of that? But more importantly, I think the biggest part of the due diligence is the financial due diligence. For the financial due diligence, I'm saying financial and tax actually. But for the financial due diligence, you're really verifying because most of the information you receive from these companies are financials. They've said that they have done this before, they've done that before. Is this really correct? So it's more than audits because you're not just checking. but you're really seeing that is this company really truly as viable as they are? Are there any contingent liabilities? Are there any challenges that that may not meet the ordinary untrained eye? So we usually engage a lot of financial guys just even help us to review and make a sense out of this business from the financial perspective. You know, of course, in addition to these, there are other, depending on the kind of investments that you're doing, there are considerations around environmental and social governance. Even checking how them checking some of this. I won't go into a lot of those other areas. You sometimes you do a commercial due diligence just to see whether truly this company truly as viable as they say. They say that if they should start the operation, they can supply, they can meet the needs of 1 million Nigerians. Are there really 1 million Nigerians that are looking for this kind of service, those kind of things? So sometimes you do those kind of commercial due diligence. Sometimes you do a technical diligence, assuming we have these plans. This plan can do 25 bottles per second. You get people that will come and verify that it's truly can this thing do 25 units per second. So the due diligence exercise, I think, is probably one of the most important part because it is when we're actually checking. Now, of course, it's one thing for us to do due diligence. It's another thing for somebody to have prepared this company ahead, which is why I feel it's important to speak about this slide ahead of even before they even ever know that they need a due diligence. Is somebody even checking with them that indeed from day one, even before they even need funding, that their accounts are properly done, and they check that their tax issues are properly addressed, things like that. Now, after the due diligence is done, the next step is, okay, fine. We've presented the issues to the investment committee again. They've now said, okay, fine, all the concerns I have, all our worries are resolved. The ones that are not resolved, this is how we plan to resolve it. Based on that, you now go to the concept, you completely do the investment, you try to enhance the value, and then at the end of the day, you exit the business and make your money. So this is basically what the life cycle of private equity looks like. The next slide, please. Now, just because I know people wonder what is private equity, what is PE, what is VC. There are many people who even use them interchangeably. Now, for the purpose of this, I think let's just take it that the venture capitalists, they are almost more or less doing what the private equity guys are doing that I explained earlier. The biggest difference, okay, somebody is asking what ESG is. So ESG is environmental and social governance. So as part of for many businesses, I'm sure you've heard of companies being socially responsible and things like that. So as many times as part of your investments, apart from making money, you also want to work with a business that that actually is doing something that is properly done. So you check the environment. Are they polluting the environment? Are they doing hazardous things? Are they destroying natural natural resources and things like that? So you look at the environmental. Social, are they displacing people? Are they helping people in their community? Governance, do they have a board? Are they doing things that are that are just ensuring that they are taking things that has to do with governance seriously? I hope that's clear. I mean, we can ESG is a very, very big area that each of those areas I said can be very, very big. Yeah, thanks for that question. For the venture capitalists, so what they do basically is almost like what PE does, almost just everything I said about PE, just copy and paste. The biggest issue with venture capitalists is that they are more concerned with the earlier business, earlier startup businesses, earlier stage businesses that, of course, maybe have passed the ideation stage, but are still very, very high. We probably, assuming that I have one app that app that I can use it to determine the blood pressure of everybody in the West by one click. or I have one vaccine that this vaccine is what can, that kind of thing. Things that are earlier stages, you are maybe perhaps you've done a bit of study, and then whoever that funder is believes that truly that this thing can do what you want. The issue with venture capitalists is that at the time that they are coming in, the business is still very, very, very small. The cash flows are still either non-existent or very small. So for many venture capitalists, they will not give you all the money at once. They will have milestones, which the money would take. That's where you hear Series A, Series B, Series C, and things like that. Which is where money is actually given in tranches based on the milestones. The Many people see VC as a bit a riskier type of funding, because you are investing when the cash, what you're seeing is still very, very small. But at the same time, because it's still that kind of early stage, the kind of return that you can make, is almost, it's hard to believe. That's why at time of valuation, people value it at 20 times the value they are seeing, 50 times the value they are seeing. Of course, they also are not there to lose money. So basically, what they try to do is that, come, this company will believe in it. They will work with you to make sure that those things that you are saying that you want to do, those milestones that you want, actually achieved. They feel people feel that sometimes that VCs or even PE can be a bit controlling, because all the flexibilities that you have as a PE, as a business owner, you probably lose many of them because they will almost force you to do things in the proper way. So I hope, does anybody have any question between the big difference between PE and VC, between private equity investment and venture capitalist investments? So if not, I'm not seeing any hands. I'm going to assume that that is clear. And please, if you have any question, I think is really critical for you to follow what I'm saying. Just like the person with ESD, please drop it. I hope I see it in the chat box. But please, can I have the next slide? So I think, and just to summarize what I've said before, the objectives of VC and PE investing definitely is not to lose money, because you may have heard me speak about the thought that they want more, they want they do riskier investment. They are unsure of cash flows. They are unsure of this. They are unsure of that. You're wondering that the how do they make money? Of course, obviously because of the way it's growing. There's actually opportunities there. But I think in a way, these gaps that we see in these SMEs is exactly what is now the more attractive thing. It's almost like inefficiencies is what now brings value. If I know that this company is doing 4 bottles, is doing 4 bottles an hour, but I know that if I should correct A, B, C, and D, they can actually make 20 bottles. While somebody will say, look at this company, I don't have time for them. How can they be making only 4 bottles? I can't invest. Somebody, a PE person will say that, assuming I'm able to correct this, change this manager, change this operation, and change this and change this, that, I should be able to make 20 bottles. And that in itself will encourage me to make. Of course, there'll be some time that you make some of those plans and they don't work out. It is how the way it was originally envisaged. But many times, what you see is you're able to see where those areas that if you can add value, the value of your own money would increase substantially, which means that you can make substantial returns to your own investors, and also opportunities for that SME. You get that gap that the banks have been running away from. You are coming to cover that gap, and you are smiling to that same bank with the returns that you are making. And because many of these SMEs are also, at the end, like I said earlier, that when I'm investing, I look at how this thing can improve my life. That if this thing can allow me, can make me do a car, can help me to automate my car, that I have to drive from Magodo to Lekki without a driver. I don't have to look up. It makes my life easier. It also supports an economic need, something that is actually a need in the society. So you're actually making money. The SME is making money. You are helping a gap in the society, and at the end of the day, is also providing growth in the economy. Now, one part that you may have inferred that I did not mention is that apart from providing funding, because the PE of the VC guys see you as their almost like they are their projects. What they also do is that they will do everything within their power to give you the kind of support to make you succeed, because they don't want to lose money. So associated with many PE transactions is really a technical assistance facility, and this TA facility many times it helps to, on one hand, reduce the risk that is attached to this by addressing some of the challenges. So during my time as private equity person, so I've seen where a business is doing poultry, for instance, and what the technical assistance um, facility is doing, helping them to set up sorry, not poultry, doing dairy, is helping them to set up a milk collection center, where they can actually collect milk from Fulani cattle headers around them. I've seen, maybe assuming I'm in poultry, for instance, you've seen where they've created an outgrower scheme, where they can actually, after, in addition to the capacity of their cages and whatever, they can actually now have people that are actually growing beds for them. We've seen where one of the challenges that you've seen is that this company, in terms of their financial accounting systems, they are not up to scratch, and you are using the TA facility to set up proper accounting and internal control processes for them. So and many times even identifying that this is the real gap, is a big part of what the PE person does. So again, PE, private equity, I think helps to almost like an all-round support over and above what many of these SMEs will get, even assuming they are able to get funding from the commercial banks. Can you go to the next slide, please? Now, I will stick to this slide, although I think I will change it a little bit. So, in the last 2 or 3 years, there has been a general slowdown in PE businesses. And in the last, let me say, 12 to 18 months in Nigeria, especially, because I think Nigeria has had its own fair share of uncertainties, enough uncertainties to make any investor, not even only Nigerian foreign investors, even local investors, to be a bit uncomfortable. For many of you that have engaged with businesses, I mean, many businesses have seen kind of unbelievable turnaround negatively, than they have seen in most of their lives, from the FX challenges to inflation to fuel to power costs to things like that. So many of this has made a lot of people lose money, that much more than they had planned in private equity, and had made generally reduced investments, generally, reduced investments. I mentioned I was going to change this because for some of these things, while they have been unfortunate over the last 12 to 18 months, we are seeing over the last 6 months or so where many investors, especially the foreign investors, are beginning to relook at Nigeria again, much more than before. Which this is why I think it's great that we're having this conversation now. About, I think, a few weeks ago, there was the African Venture Capitalist Association, Venture Capital Association conference in Nigeria. And many investors came, and I think one thing that stuck out to me is that even in in the midst of all of these issues, there's still some kind of relative stability in the Nigerian economy now. They are seeing that, I think they feel that might continue for a while. And this is making many of these investors to be a bit more interested in looking at PE, looking at investments in Nigeria. And what this automatically means is that they will be coming back. And if they do, how do we provide, how do we provide the kind of support that these SMEs have? Let's not forget that these SMEs are just like every other business that we probably have seen in terms of preparing themselves for investments. Most of them are not prepared. So the big question is that, and I think that please go to my next slide. I think the big question is how do we ensure that we can actually provide these companies with the support that they need? Now, just before I go into what investors typically would look at in businesses, I thought it would be interesting just to help us, to understand that, or to see why I think that we need to pay attention to private equity. The gentleman that spoke earlier on says that we cannot ignore it. It has private equity, venture capital has come to stay, and PEVC, they have come to stay, and they will need our support. So now the question is, how do we position ourselves so that when this time comes, they see that indeed we can. So if the first I said is guiding clients on funding options, at the beginning I mentioned about there's you can do equity, we can do debt. The truth is that for companies, there's an ideal capital structure, that will give you the ultimate value. So it's going to be the work of a finance person to be able to help them identify that typically based on your business, this is the amount of equity you should be having. This is the maximum amount of debt that should be in your capital structure. So based on this, when you are looking for funding, this is the type of funding you need. So I think it is a very, very important part for us. Oh, somebody is asking that what's the difference between PE and VC. I spent quite a bit of time on that. I mean, maybe I'll take that at the end so that we don't we don't waste a lot of time. But I think the summary is that PE looks at more matured businesses, and then VC looks at more earlier stage innovative type of businesses. I would, if there is one or two or three more people that don't really understand with the difference between P and VC, I can spend a bit more time to address it. But because I spent some time to tell the difference, I think I'll just move on. But please, if you feel uncomfortable, please put the questions in the board. Yeah. Somebody asking that how a patrick is BOI on this. I think that was conversation. Funny enough, in my current role, I work very, very closely with BOI, but I would appreciate if you don't mind. I'll try not to digress too much from this. I think I'll take some of those questions at the end, because that question of BOI will take me off what I'm presenting. Yeah. So the next area is career and professional growth. So many times, and I think I will look at this from two perspectives. From what I've seen, the creation or advent of private equity creates technical jobs for the specific area that those businesses are, but more importantly, more technical jobs from the financial perspective. For me, most of the businesses that I've been to, almost, I think at the point as a company at that time, we took a decision that we need to get one of the areas that we need to be sure that we are on top of is the company's finances. You're giving $3 million, $4 million to a company. You want to be sure that there's somebody there that is taking care of that money, someone that is competent. So in fact, there was a time that we decided that, and I know many PE firms don't do that once you're coming in, you're hiring a professional finance person, a financial accounts person that has the kind of experience to actually handle funding, to manage funds. You get, so it's almost everywhere that you see that a PE deal is happening. Around there, almost sniff around a little bit, there will be an opening for a financial professional. But the only thing is that because of the kind of quality of the accounts of that they require, the kind of reporting they require, they are always so particular about the quality of the person that they are also hiring. So it's more than anything, it's also a wake-up call that it's not going to be business as usual. It won't be just the debit and credit. There's going to be reporting. There'll be strategic thinking required. There'll be a lot of what do you call it? Financial analysis expected. They'll be reporting to international investors. So the kind of finance person that is poised, prepared, and equipped to be able to handle the kind of complex financial accounting, the kind of financial reporting requirement that comes with these PE ones will always be the ones at the top. you know. Then of course, I'll just run through the. I think we'll speak a little bit about number 4 and number 5. What do you call it? Valuation and deal structuring and financial reporting sometime later, because I think those are easy. It's almost like easy bread and butter takeaways for we finance people. They falls right on the lap. Of um, private equity investment. But if you notice, all of these items here just shows that there is need, for one to spend that extra time to understand, almost like this new kid on the block, and what one needs to do to, equip oneself, for the new requirements over and above preparing financial accounts that come with these new kids. Now, can you go to the next slide, please? Now, so I am going to speak about some of the things that I think that um, businesses, financial investors, strategic investors, PE investors, VC investors look out for. You know, and as I'm going through this slide, I think I thought it was important to bring up this slide because it will help if ideally I, as Olumide, am advising a company that is probably going to be looking for money. You get, there will be probably be more that I'm going to be supporting them with than just helping them to prepare their accounts. So I brought up these 5 things, so that even in speaking to a lot of these businesses, and helping them to prepare themselves for the kind of funding they are looking for, even before there's even a funder on the table, the kind of things that you are pointing to them that you have to pay particular attention to, and I hope that while I'll go into it in a bit more detail, I hope that even from the headings, some of you can relate to some of the issues, character, competent management, scalability, proper records, and regulatory compliance. Now, please, the next slide. So, if you ask me, I would debate that this is probably the most critical of all the things that investors look out for. The deal that I've done in my career, in my I think 13, 14, 15 years invest in private equity, the deal that I've done that has given me the greatest grief was not that the business case was bad, was not that the macroeconomy issues were too challenging for us to surmount. It was the character of the owner. You know, this deal was one that at the beginning, and I blame, in a way, looking back, I think one of the things that we did differently was not spending enough time understanding the person, and maybe this is the feedback in terms of what should spend time on during due diligence, where the person says all the right things, but how do you check and verify all those nice things that the person says? The character of the person, that because in a way we joke in private equity that private equity is like marriage, where you actually going to bed with somebody, and you have to really know who you are going to bed with, you know. And many times we also see that one of the reasons why so perhaps PE transactions or VC transactions take a long time to get to a close to deployment of funds is you need to spend that time to understand. It's almost like courtship, who you are dealing with. I'm hearing an echo. you know Now the question is, how do you verify the cash? So people pay a lot of we investors now pay a lot of attention to the character of this person. What are people saying about the person? What is the person saying? If you say, I collected money from that person, he didn't know, in fact, that money I will not give it back to him. Or that small small things that you hear from conversations that you might just smile and know, but it's telling you the kind of person you are dealing with. You know, you are checking, you're checking Google, you're checking, all forms of websites for what you can get about this person. If the person is telling you that, I took that guy to court, I took that, I don't care. Like, they can take me to court if they want. I will not do that kind of thing. This person will probably be a troublesome kind of person. If you're seeing someone that is maybe is cheating, is not paying his staff, is obviously, that just to let you know that this is one area that may not, even over and above what the business case is, that people take very seriously, and it's not just a nice your character. Okay? It's something that is almost is we are bringing it to the point in which it is a science. Which is even that, which is you as an advisor to that business. You are teaching him, grooming him. Be careful of what you are posting. Be careful of what you are saying. Be careful about how you are being perceived, because this is a major metric that people are going to using to actually assess whether they're going to give money to you. If I'm going to give somebody 5 million, I damn well want to know who I'm giving this money to. Now, the next one is please can you go to the next slide? Now, for competence, so this competence is a very tricky one, because I've seen a lot of businesses, right, where the owner, will come and meet you, will say all the right things, will see, but after hearing all these wonderful, wonderful things that the person is planning, you now realize that it's only one man. What happens if this person, you invest in this business, and God forbid 2 days later this man is gone down? What have you really invested in? So one of the things that we pay attention to is, even what does that management look like? Who are the people that have voices on the table, from the management perspective, from the governance perspective, from the advisory perspective? So in recent times, I've seen where many, and sorry, I'll speed up a little bit. I've seen where businesses are where private equity firms spend more time understanding and analyzing, the quality of the staff, the quality of the managers of the business, over and above who the promoter is. Definitely, there will be one man that has the vision. There will be the visionaire, But over and above this gentleman, who are the people that he's working with to ensure that this thing comes to fruition? Please, the next slide. So scalability. So for scalability, it's interesting, because I when I was talking about private equity and even venture capital, I talked about, you are looking for where you see a business and that the business can grow. If I want to invest in a company and the company is making 1 billion naira a week now, and that's what I'm investing in. The valuation, which we'll get to, is at 1 billion, naira a week. But from what I've seen, everybody that is using this business is already using it. There's really no value. That the best that we can get to is maybe 1.1 billion a week. you know. Whereas I've seen another business that is making 500 million a week. But I see where if I invest in this business, and I correct a few things, they can get to 3 billion a week, or 3 billion in 2 weeks. You know, that was probably more of a business that I can invest in. So one of the things I would like to see is show me that there is actually value in what I'm investing in, that I'm not joining the party when the party is over, when the business owner has already gotten all the value that is in this business, you know. So I spent time to understand what these businesses can do, or what these businesses are doing, and what these businesses can do. You get? I want to see how they can turn my Ogu to Ogoji, turn my 20 to 40. If they are going to be turned my 20 to 21 or by 20 to 22, I'd rather not invest. So it's important to also, so I think this also lands flatly on the plate of whoever is helping them with their finance, to understand what are the what does the future of this company look like, and what does a future investment stand to benefit from this business. The next slide, please. Now, proper records. You will be shocked. If it was recent. I was speaking to a particular company. This company has invested, I think, about $7 million in their facility. Very interesting, very exciting investments. And then they had, in fact, we actually had a few development finance guys that were looking to support them, because what they did was substantially interesting, not only um, from a financial perspective, but also from an impact perspective. Very excited, So we now say, oh, fine, let's move forward with them, and then we move forward to go, okay, let us begin to check their financial records, And it was, to my shock, this company had practically, they didn't even have, I think what you see many times, that the companies have their financial records in Excel. This company literally didn't have any financial records. Everything was the promoter was a substantially wealthy gentleman, and then a lot of the records were just spent, and they had receipts in one shelf, and for the life of me, I'm saying that how can you spend $5 billion as such a record? Maybe I'm just an Ijebu man. If I'm going to spend $1 million on a business, I will record to the last 10 naira, you know. But to back it down, I think the point I'm trying to say is that for any the accounts, financials is the language that we financial people speak. If I want to know how well you are doing, if I want to know how well you are going to do, it comes down to the quality of the financial records that you keep. If I'm seeing your balance sheets, imagine, yes, I'm seeing your balance sheet, and on that day one, your balance sheet is not balanced. You get, or the cash flow that I'm seeing there does not tie into my understanding of what your business cash flow should look like. Or those are some of the things that I'm at this point, I'm not even talking about whether the account is profitable or not profitable. But then we're just talking about ensuring that the account is correct. Immediately, I'm seeing records that are incorrect, and I'm sending it back every now and then to the company back, that their financials are incorrect, it's not logical, it does not make sense, and all of that. Immediately, I begin to doubt that this company pays attention to detail. So it's one of those things that people overlook. But the quality of the account that you prepare, you present to your investors is significantly important and necessary to the kind of investment. Sorry, I think that somebody has to mute. It's to the investment. And I'm not talking on only financial records now, even operational records. So if you're into poultry, for instance, your mortality rate, the records of your mortality. If you're into dairy, I'm sorry, I'm using a lot of this agri related, because the fund I managed, the private equity fund I managed, was an ag focused fund. If you're into dairy, what is the yield per cow? That kind of a thing. What is the combination? How are you combining powdered milk with fresh milk together? That kind of a thing. I mean, so those are some of the things that we pay attention to, knowing that you need records. I think the thing about records is that for you to have very good quality records, your record keeping must have started way, way long before you even need money. I'm coming to you and you're showing me a 5-year history of all the mortality rates you've had. It's different from if I come and you're showing me, sorry, I just realized that you need it. This is the mortality rate since last week. So it's one of those things that even way above the time that people need money, they need to start paying attention to. Now, can I go to the next slide? Now, the last can you get the next slide, please? I think the last one I'll talk about, I'll just touch on this, is just compliance. Because please, the next slide. Please go to the next slide. So when it comes to compliance, it's something that most investors pay attention to. One is ensuring that you are complying going forward. The other is that you are complying now. And the reason why compliance is so important is that it also, are we leaving? Hello, sorry. Hello.
Yeah, we can hear you. Go ahead, please.
Yes, sorry. Yeah, so I mean, because the tax is one area that we need to spend a lot of time on, simply because you want to be sure that you don't have any contingent liabilities. And for most private equity, because like I said, you want to exactly know who you are going to bed with. If I realize that these people have not paid taxes over the last 5, 10 years, for instance, in valuing that business, I would need to spend time to understand what that volume of that tax liability can potentially be. Now, please, can you go to the next slide? I'll try to be a bit faster. Now, so I've spoken a bit about a few of the things that I think, I think on that other slide, how I think financial professionals can help, but I think that of all of it, there are a few areas that I think are important. One is the expert valuation, these valuation methods. The other is financial analysis. I think these are two areas that is almost impossible to do any PE or VC transaction without these two. Please, can you go to the next slide? I will not go into the into valuation. You get valuation in itself, because I think that would just take a bit too much time. But I think I will speak to how we approach valuation generally. Um, because valuation itself, I would say that I won't call it this is how would I say that? Will I say it's a science or an art? But it's not like mathematics that I say 2 + 2 = 4. It's because a lot of it has to do with as estimates. You get, because if you ask me for my age, I can tell you that I'm 12 years, 4 months, and 3 days. But if I'm estimating when somebody is going to die, for instance, I can't just say that person is good, except I have a crystal ball. The person will die in 14 years, 2 months, and 4 days. Yes, I'll come and join them. I'll go and join them. You go and go there. Yes. Hello? Hello? Can you still hear me? Sorry,
We can hear you. We can hear you. Go ahead,
there was a bit of distraction. So because of that, so what you need to do is just come up with different different assumptions on how you think that these companies, how many years you think these companies will actually will actually survive for, So at the end of the day, you come up with like 2 or 3 or 4 different valuation estimates, and then you try to average them out. Now, the first one that I will speak to, please go to the next slide. The first one that I will speak to is the assets approach, which is where basically you're looking at the asset the company has, and then based on these assets, you are trying to estimate what the fair value of those assets are. Again, you look at their liabilities and what is the fair value of that liability, and then you use that to base what the rough idea of what the asset of that company is. Now, this approach is not really, in a way, it's almost like the most straightforward, because it has, from the balance sheet itself, you can also already get a rough idea of what that net assets looks like. But the issue is that, because many times the idea of evaluation is to see what a business can do. This kind of robs the business a lot from the business, from the eye of a businessman, and more from the eye of the finance person. So for a finance person, it's very easy, but from a business perspective, it's very, very it's not ideal. So, but we still use it just to even give a rough idea that, so if somebody is coming with one evaluation that is over and above what makes any sense, that come, bros, take it easy. Look at what your asset value is saying, before you start asking for a major item. So please go to the next slide. So basically, it's really what I think many of us in this room can easily relate to this. Really, you're just looking at what the assets of the company is. I give an example here. You're looking at what the liabilities are. And then for the assets, you're looking at, okay, fine. They had cash. Their cash is cash. They have account receivable of 75. Maybe there's some doubtful ones. Maybe what can really actually get is 67. That kind of a thing. They have inventory of 35. There's some spoilage and all of that. Shrinkage, maybe the real value is 32. Then they have some properties and stuff. It's the book value is 201, but at the end of the day, the market value is now 235. So based on this, we come up with what we feel is the total assets, and then take total liabilities. It's possible it's higher, it's possible it's lower than the book value, but at least it gives an idea of what the fair value of the account is based on the assets that they have. So we typically use this, but we keep it in our. I think of the 3 options, of the 3 broad valuation option, this is probably the least used in private equity deals. Now, can you go to the next slide? So the next slide, so this is the market approach is now more being used, because I think, again, so this is while the first one I mentioned, is really focusing a lot on the asset that you use. This one focuses on what you can see, numbers from the financials, but tying it to the market. So the market brings the volatility, but it's also a bit more stable. So if you're assuming I'm using value EV to EBITDA, so maybe just for the purpose of people that are on this call, so the way it looks is this: assuming I say that for generally, after I've done analyzed like 50 businesses in cassava, I've realized from all over the world, I've realized that for companies that on the average, companies that make 1 million naira as sales, their value is usually 5 million naira. Companies that made 1,000 naira as sales, their value becomes 5,000. Company that makes you get 3 million, their value becomes 15 million. So at the back of my mind, I can say that means most times the company the value of most companies in cassava is 5 times their sales. So if I now meet a company that tells me that my sales is 15 million naira, you get. So is it reasonable for me to assume that if that's the case, so what I'll assume as the value of that company would now be 15 times 5, that's 75 million naira. I'm not sure if that makes sense. So it's really estimating the value of a business, one, by a metric of that business that is available to you, and then by comparing it to an industry or a market metric. And now what that metric is can be different things. It can be price to earnings, it can be the value to EBITDA, it can be price to sales or whatever. It can, and you can even use a combination of some of this. But the whole idea of the market approach is reviewing a business. And in a way, if you think about it, it makes a little bit of sense. As long as you have a pool of investment that is big enough that you can say that this metric is what is typically common. Can you go to the next slide, please? So this slide, of course, because many private equity transactions will not be quoted, most of them are not quoted. The best you can use is to use quoted companies. So assuming I want to estimate a company, that has revenues of 40, EBITDA of 9, and then I want to estimate what the valuation will be. So what I'll go and look for from the capital market, from the stock exchange, all over the world. I'll look for different businesses of different sizes that have such similar business lines, and I now look for those ratios that they have. So beverage A, B, C, D, E, based on this, I'll say, okay, what is the average earnings value to sales? What's the average value to EBITDA? What's the price to equity ratio? Price to equity ratio. So based on this, the price to earning ratio rather. Based on this, I come up with these ratios. So the example I gave, so I'm assuming I was going to do earnings over the value of the company is a sales multiple. From what I've seen here, the sales multiple, if I do my average, is 2.9 times. That's what I'm saying, is that every company, that the value of the company is 2.9 times their sales. And that's what I will use to estimate the value. So what as an investor, what I need to now be very sure of is what is truly the revenue of this company, what is truly the EBITDA of this company. So of course that will go into a lot of due diligence and all of that to ensure that it's correct. And then I'll now get the value based on that. Now, of course, I've made it sound very simple. It's a lot more complicated like that, because sometimes because of the size of the company, you have to discount some of these multiples. Sometimes because of the liquidity, obviously you have to discount some of this, because a company that is not quoted will not be as liquid as a company that is quoted, so it cannot be the same price value. So there are lots of things that you bring, but the idea is to compare the metric of that company to a multiple of similar companies. Can you go to the next slide, please? So for the income approach, this is the approach that most businesses like. At the end of the day, we do all three. The assets, the market, and the income. But the income approach is really you're looking at the future of this business. Like I said earlier, nobody invests in a business or just for what they are seeing on day one. They want to see how these businesses will be forever. So one of the jobs that you are trying to do is to estimate what this business looks like. That this is where they are, This is what I can do in year 2. This is what I can do in year 3. This is what I can do in year 4, year 5, and co. And then based on that, you now decide what is the present value of all those future cash flows today. So how much will you give me today that if you can give it to me, will allow me to just take this money and forget about all that future cash flows? So that is the challenge a lot of people will have is that for that business owner, I'm sure you can, as you can imagine, they usually have typically a very optimistic view of the future. So you can say, this year I'm making 1 million. Next year I'm going to make 800 million. And you say, bros, how is that possible? You know, if you're making 500k last year, or maybe 3 years ago, 700k this in the last year. This year you made 1 million. The next year that we can see is when you want to now make 800 million. Of course, I'm exaggerating, but it's a lot. But of course, if you're able to work together with assumptions that make sense, that somebody that a financial person reviewing those assumptions can say, okay, that's true. Well, based on what you're doing, what you're doing, this is a reasonable cash flow for year 1, year 2, year 3, year 4, year 5. Typically with that you can discount those and come up with what the current a fair value of that business is. We do all of this. Many of the time these projections helps you even know what the person believes the company is capable of. But because of the subjectivity of what that discount rate is, what that future cash flow is it what the free cash flow is, and all of that is typically not being used. But what I've seen a lot that happens more is where these 2 or 3 different ideas are options are identified, and then an average of all these are actually now used to give a rough idea of what the actual valuation is. Suffice to say that all of this work is done by finance and accounts and people like us. Now the next slide. Okay, so this is just an example. I think we can jump this slide. This slide just show what the cash flows are, and then what the discounted present value of those cash flows are to give the value of the year. This is what I spoke about earlier. So please go to the next slide, please. Now, I think for this area, these next 2 slides, I think are areas that I would say for financial professionals like yourselves, I think you probably will even know much more than me, But one thing I know is that when it comes to financial reporting, I think this is one of the areas that gives us the most grief, because for many of for many of us, we are investing on behalf of international development finance people and all of that. So they have very clear expectations of how accounts should be done. You get that, how they've seen accounts done all over the world. So one big task that people have, that finance people have, is how do we ensure that we get to the point in which the quality of the finance, I think I've spoken about it a little bit, if the quality of the accounts that we are getting, is one that they can beat their chest and say they understand, as if it were coming from, a finance guys from, who knows, KPMG in Mississippi, or from one big audit firm in Chicago, that kind of a thing, So I think one of the issues that we have is that how do we ensure that that we actually handle it? And bearing in mind, like I said earlier, these firms have very, very complex financial reporting requirements because they really want to understand. They are not here. They really want to understand what is going on. So the accounts have to be clear. They have to be on time. They have to be properly done based on standards. So so I think those are some of the things that one needs to pay attention to. Then I think I have just please the next slide. And of course, I think in my own mind, I just mentioned some of the areas that I think that we need to pay attention to that we have seen, from revenue recognition to fair value measurements, consolidation to financial disclosures, transparency, and co. Like I said, these are international reporting standards. You probably know some of these things already. But it just points. I think the point I was trying to raise here is that the efficacy of this, the how this is presented in the account, and ensuring that people understand this, the business owners understand that these things, might not mean a lot to them as business owners, but if you are beginning to look at investments from private equity firms, you must pay attention to these things. It's no longer business as usual. So as you're doing your accounts, and like I said, it's not what you begin to do when the investors come. It's something that you have to start doing now. So if we know companies that are probably on that track to attract investments, it's something that we need to pay attention to. And the next slide, I think I should be rounding up. So I mean, this is really just what do you call it? Some of the what I've spoken about over the last, things that you need to do, as professionals in terms of understanding how models should work, how it ties to the net asset value and the cash flows. We need to be excellent. We have to be able to put it on our CV that we can do it and do it well. In terms of internal control and risk management, financial records and co, it's something that we need to pay a lot of attention to, and then even just on being on top of the changes when it comes to disclosures into the FIRS and things like that, So these are areas that as investment professional, if we're going to, not let these things slip by, there are things that we need to pay attention to. Of course, because of concerns by many of these many of these investors, and concerns about, the quality of some of these out here in Nigeria. I've seen where they try to bring international firms to do it, or they just focus on a few selected firms here in Nigeria. But really, with the proper at paying attention to some of these things, there's no reason why we ourselves cannot prepare ourselves to ensure that in our various firms we have the competencies to be able to pay attention to this. Yes, and then I think please go to the next slide. Yeah. So I'll probably leave this case study for everyone. It's a 3-page case study, and it's called Delicia House of Goodies, and I think it just gives an idea of the kind of business transaction, what do you call it, the kind of typical PE firm, the PE transactions that we see, that we like, that we enjoy, and then we debate, and you like some things, you won't like some things. Are they doing well? They're not doing well, and those kind of things. So I will leave. I think they are. Please, whoever is changing the slides can just flip. After that, just flip to slides 2 and 3. Again, so people can just read. And then while that is going on, I would take questions based on what I've presented. I will not. I don't think for the purpose of this. Either people can set questions or can be. I don't know if there's any time can debate what they like and what they don't like about this. I think on the last slide, I had a few questions for debate, but I think I'm just in the interest of time. We may not be able to have the time to spend a lot of time on this case study. So please, whoever I change it after a while, I can just change to slide 2 or slide 3, and slide 3 rather. But I'll be happy to take questions. So that's I think after those 3 slides, I wear my presentation slide. But I hope the points I raised, I think, was clear to everyone. I'll be happy to take questions and clarify.
Okay, thank you, Mr. Olumide Lawson. Thank you very much. We really appreciate what you have done. Yeah, question and answer time. If you have questions, you can put them in the chat. If you indicate with your hand, we are okay. But I want to assure those people asking for the slides, it will be sent to you. Once you register, we have your emails, we will send it to you. You will get it. You will surely agree with me that this has been
I see somebody, in the chat earlier, he said he just likes the way you were. He was enjoying the vibes. Say he's enjoying the vibes. I think your presentations makes it flow. So
Thank you very much.
Yes. As professionals, you can see that we have a major role because everything about business center on money, and somebody has to account for that money and controls. Recently, now what is in vogue is internal control over financial reporting. You can see the effects. Once the control is not in place, the business will go down. You have to anticipate. So any question, are we assuming that we got everything right? I had to type down. Is Mr. Mr. Olumide is somewhere now that is a bit tight. So we had to ensure that we're able to pin him to quickly deliver this paper as promised. So any question, feel free to ask. Any clarification you need, but be rest assured you're going to have the slides. That one is guaranteed. You're going to have it.
And I think there was a question on Bank of Industry, which I would prefer not to go a lot in, because what I can say is that what Bank of Industry does is not private equity or venture capital. I think Bank of Industry is a Nigerian, the local development financial institution, and they support they support SMEs in Nigeria more from a debt perspective. Now I know that people have raised issues about access. A lot of people have been able to access. A lot of people have not been able to access for various reasons. But I think for the benefit of this, at least, I mean, just to clarify that in the context of PE or VC, they are not either.
Thank you. Okay. Mr. Olumide, somebody said, can you do, everybody enjoys the seminar. They said, can you do a checklist on the topic? What are the things you look at? With somebody coming from financial background, then also now being faced as an investor, what are the various checklists? Can you do a quick one? That's what somebody just said there. Victor Adebayo, yes.
No, if Victor can ask it directly, let me be sure I understand what he's asking. So is it checklist as a finance person coming be presented to an investor? Is that what he's asking? What that checklist is, or
Okay.
what? I'm not really sure.
Victor,
I'm clear.
can you raise your hand up so that I can unmute you if I know where you, Victor? Let me see. Okay.
Or if not, or except
Okay,
Mr. Anthony.
Victor,
Okay.
do you want to talk? Victor, do you want to talk? You can unmute if you want to ask your question. Mr. Victor Adebayo.
Yes. Good morning. Good morning.
Morning.
Good morning.
Good morning. Can you hear me? Can you hear me?
Yes, clearly.
Yes. Okay.
Can you hear me now?
I can hear you clearly. Please go on.
Yes.
Yes, I'm unmuted.
Ask your question, please.
Okay.
Please,
So can you hear me?
Yes, I can hear you. Please go on.
Okay. The checklist is that if a local investor wants to get the venture partner to partner with him, maybe he has if there's a checklist of what he needs to get done. Although the speaker have said that it's something that you need to be doing already, like you have your accounting system in place, your accounting system is standard of IFRS. So, but I was just thinking that maybe kind of checklist can help, right? Even then, how to get those venture capitalists to invest with you, and what type of business will be attractive to them. But I know a lot of businesses, they are attractive to them. But in this case, just a checklist, maybe a summary of your lecture will do also. Just a
no, I think okay.
Thank you.
Yes. So no, thanks a lot. So I think I think it's not. It would be hard to say that this is the checklist, but I think and like I said, it's because for many people it's almost like is a relationship thing, you know. So I mean, you just want to be sure what the checklist really is. What do you need to go away with that will let you know that to a good extent I know who I'm investing in, you know.
All right.
So I think it's almost look at it from the perspective of what is the checklist of a man that is going to marry a woman. You know, it's hard to say that this is exactly what I want to know. Can she cook? Can she clean? Can she, that kind of a thing. But you want to spend enough time to know that at least to a reasonable extent, you can understand to a reasonable extent that I know this person, you know. So I know, of course, from a business person, it's different from the financial, from the character, from the, those kind of things. So it's really just the things that the person can understand. You're right. Somebody asked, there are definitely venture capitalists. There are lots of, but I think there are even probably more VCs than PEs, you know. And many of them, and many of them focus on different areas. Some might be, like I said, my own funds focus on agriculture. There are some that focus on education. There are some that are just generalists, you know. But I think for many of them, it's just for them to understand how the value of their investment can bring substantial value that will make money for just not only themselves, but for the business owner is what they typically look out for.
All right. Thank you.
Okay. Mr. Luke Lawson, somebody asked, what about the details of the presenter? I think at the end of the slide, there are some, I think, email or your,
No,
yes, your email on your,
I don't.
slide.
Is it, if it's not on the slide, please, Mr. Anthony, I'll be happy if you can share.
Okay, it's not on the slide. Okay.
I can't remember if it's on the last slide. If it's not,
okay,
I think it's just my name. If it's not, please, I'll be grateful if you can share it with the group.
Okay. Your email. Okay.
Yes.
Okay, like what do you want me to share? The email or the name and phone number? Which one? Just let me know.
I think
Send it to me.
maybe
email and phone number will be fine.
Thank you.
Okay. One thing I can say with Olumide, you said WhatsApp. That one is certain.
Yes,
You said
I'll send
WhatsApp
it. I'll send it to you
okay.
in the purpose of once this conversation.
Okay.
Yeah.
Okay, fine. I will. Okay, we will share it ahead. You know, so I think that is I will share it. But you said the WhatsApp. That's certain. Any other question, please? Okay. Okay, no question. Everybody wants.
Sorry, the question I have, he may have to handle it personally with me. It has to do with venture capital investment. Yeah, so that's why when these details were requested for, I had to make a comment that we need both because I would like to discuss it with him personally. I have some interested people, and some people have been handling it, but it's like they're not doing it so well. So
Okay,
I
I'll
would
be very
like to
happy to.
share
I'll be very, very happy to. I'll be very happy to connect. I'll be very happy.
Okay.
Thank you very much.
The
I'll be
name
very
is
happy to.
Ijoma. In case you see my message, so you can.
Okay,
Ijoma
that's fine.
Yeah. So please, I'll get
Okay.
in touch with you after this.
I'll be happy to. Thank you very much. I'll be happy to.
Thank you. All right.
Okay. As a technical secretary, I will also be. You have my number. You have my contacts. I can always also link you to Olumide once you ask for.
Okay.
Technical secretary of Lmds. Yes.
Okay, Anthony. That's fine.
Yes, you have my contacts. I can always link you up with him. You know, I can always link you up with him. Okay, there's somebody here. He said there must be a rating to measure what a business financial advisor owed to manage a startup business venture investment to grow properly. What are they? What are they? Mr. Lawson, can you see the question?
Yes. So again, checklist. So I don't think we've we've come to the point where it has come down to a science that for you to be an advisor, you must be this, you must be that. I think at the end of the day, is really that you're able to give whoever the investors are comfort that the quality of your work, can be. And sometimes it's not just even on the technical side, it's even in terms of the appearance. That is really comparable to what they will get from anywhere in the world. They're asking for information. The quality that is coming out, the speed at which is coming out is fine. The support that these businesses are getting from you, is top notch and things like that. So I don't think there is a checklist, like I said earlier, or a rating. Is really at the end of the day, it comes to the way that you brought your professional competence to the table for the purpose of for the purpose and for the benefit of the that potential that promoter's business.
Okay, Mr. Lumide, I have a question. On this issue of investments, the place of patience and time, I think you might need to speak on it so that it's not like a magic wine that the money just drop and then everybody things just change and people are just expecting returns immediately. I think you need to be from a practical point of view so that it will not just manage expectation of people.
So I think the issue of time and patience comes on in two perspectives. One is in getting the money in the first place. Like I said, it's many times many of the transactions take a while because people want to be sure of who they are being involved in. So they take their time to understand their business. They know that they lose money if you lose money, and they are not taking collateral. So they want to be absolutely sure that they're taking the right decision. And then if, for instance, your business is into cotton wool, they want to speak to as many cotton wool businesses in Nigeria as possible to be sure that all the cotton wool businesses, yours is the one that they should invest in, or that kind of a thing. So because of that in itself takes time. One cannot put a time to it. Now, the second bucket of timing, has to do with how will I put it now? The investment itself. It doesn't. No business can transform overnight. Even in putting together some of the value creation strategies, it takes time. So the PE firm has to understand that some of these things take time. They might have milestones to measure progress, but at the end of the day, they have to appreciate that it takes a lot of time, and I respect that time. Anthony, I hope that answers your question. I don't know that
yes,
you have.
Yes, very well, very well, very well. So that because you manage expectation, but people want it now. Somebody said, what does venture capital do different from cooperative support?
And of course, one big thing that venture capital does is giving money. And I think so we don't make it also too theoretical. I think the way we should look at venture capital businesses is these are businesses that want to make promoter businesses succeed and are willing to give them all the kind of support that they require to make it succeed. So if I was going to group the kind of what VC does is, one, provide you with the financial support you need, and then provide you with both the strategic and technical support that you need. Definitely, this will vary from business to business, especially if they are willing to support that business. But at the end of the day, that is what I think that's a very big bucket of what they will typically do.
So cooperative is talking about what is making it different from cooperative. I want to believe he's talking about cooperative You know, there are cooperative and society that gives also. What's the difference?
No, that's very different because private. So venture capitalists are these are investment. These are professionals, and their job is really to one kind of funding they will give to you is really funding that you need to be able to succeed. You know, so their work is more or less. So it's not just your cooperative. I believe, if I understand correctly, most cooperatives are usually like peers, people of the same society trying to help each other. You know, but it's more or less this is the group of people that they've probably been doing this kind of investment for many, many years, understand what it takes for businesses to rock. It's almost like having, instead of having your friends helping you, it's almost like having your big brothers or your fathers helping you, so to speak. You know, so it's completely different from the level of what cooperatives are doing to support your business. These are really people that their only responsibility for your business is to make you succeed so that they can also make their own money.
Okay. There's a question here. He said, my thinking is that venture capitalists are investors who invest in long-term investment or projects of 15 to 20 years before making profit. True or false? I don't think that, just answer that. You stay on for the 15 to 20 years? So I think that duration of when you exit matters. Can you speak to that?
So many times they don't like to live between 7 to 10 years, you know. But I think but the ultimate for them is that they want to also live when they feel that the value of their investment have matured, you know. And many times what I've people seen is where the business owner themselves wants the VC or PE companies to even leave earlier because they also want to just keep some of the value to themselves. What I can tell you for sure is that VCs and PEs are very, very long. They are long-term investors, you know, 7 to 10 years. Are there instances where they invest longer? Definitely. But it's typically not usual for VC businesses to invest 10, 15 years. That's a bit long. But it's definitely substantially long period, you know, long period investment.
Okay. Somebody asked about the slide of page 2 and 3. It will be part of the presentation. We'll send that to you. Okay, I think I've answered.
Yeah, because I have to rush.
So I think we want to thank you very much. Yeah, as I said,
thank you very much.
He's in the middle of something he has to do. We thank everyone for being on board. So, Mr. Oluwide Lawson, thank you so much for everything. At this moment, we will take a break. We'll take a break, and the next paper presenter will be coming up by 12 noon. Please, it will be coming up by 12 noon. Thank you very much, everybody. Thank you, thank you, thank you, thank you.
So, Mr. Wada, we should hold on till 2 o'clock.
No, 12, 12, 12, 12, 12,
okay,
12,
okay,
12,
okay,
12,
okay,
12,
no problem.
just 12, 12 noon, 12 noon. The next paper presenter. So we're on a short break. Please
no problem.
Take a walk, but don't go far. By 12, we are
we'll stay online, no problem.
Dr. Shegun will be coming on board. Professor, thank you.
Okay, also the microphone never muted. Where's the microphone? It has to be muted, you know. Èyí tó bá ń ṣe báwo ni?
Good afternoon, everyone. Good afternoon, everyone. I hope you cannot hear me. Good afternoon, everyone.
Good afternoon, sir. Good afternoon,
Good
sir.
afternoon, sir. We can hear you.
Yes. Ladies and gentlemen, good afternoon, everyone. In about 3 minutes' time, we'll start off the facilitator is here. In 3 minutes' time, it will be 12 noon. So we start. We want to keep to time, just like we did in the first paper, so that we'll get the best from the paper presenter. So just in the next 3 minutes, we'll start off at exactly 12. Thank you.
Good afternoon, everyone.
Good afternoon, sir. Good afternoon, doctor.
Good afternoon.
Good afternoon, sir.
Good afternoon, sir.
Yes,
Good
we are
afternoon.
getting
Good
prepared
afternoon.
to. Good afternoon, everyone.
Good afternoon, sir.
Good afternoon. Okay, ladies and gentlemen, you are welcome back. I hope you can hear me, please. We're about to start the next paper to be titled.
Good afternoon, sir. Good afternoon.
Good afternoon. Good afternoon. Titled Digital Transformation in Finance and Accounting. The key focus will be impact of automation, AI, blockchain, data analysis on financial reporting, and audit practice and advisory. And I have on board Dr. Shegun, who is a lecturer. Dr. Shegun he has headed an account department before. He's presently lecturing at Federal University of Abeokuta. You know, he's a seasoned lecturer, and he loves reading, writing, and playing football. As our custom here, we like to keep it on time. I want to present to you Dr. Shegun. Dr. Shegun, you have the floor, sir. Thank you.
Okay. Thank you very much. I want to appreciate the district for the opportunity given to me to share this a bit of knowledge, and also to get involved in an interactive session with my professional colleagues. I am sure that all of us that are here, we are all professional colleagues, and we're just trying to help ourselves to know the next level in our profession, because we are coming from a particular angle, we are coming from a particular way. And when we look at what has been presented in the morning, we know that the place of an accountant can never be dispensed with. No matter the amount of money you have, no matter the amount of interest you have, we've seen it that the place of an accountant, a professional accountant for that matter, cannot be underrated. So this morning, we have looked at the types of investments, how to do a lot of investments. And while we were presented with that knowledge on investments, whichever way the investment is going to be, there is one thing that is very peculiar and that stands out about what the person has said. And that's the fact that your account must be put in proper shape. That is, for anybody, whichever type of investment the person is going to get involved with, the most important thing is that the person will be looking at your words, at your financials. And when he's looking at your financials, that means the people that are going to prepare the financials are people that are experienced, are people that have been certified. So sorry for the break in transmission. So we are looking at one of the most important things that it is really needed in order to do what? To get the best of what we intend to do for our various companies. And that is what we call the digital transformation in finance and accounting, looking at the impacts of automation, AI, blockchain, and data analytics in finance reporting, audits, and and financial services. One thing is to look at where we are coming from. That is, we want to look at what is the expectation of the accounting profession. What are we expected to do as an accountant? What are we expected to do as a finance specialist? What are we expected to prepare? What are we expected to know? Or where do we start from? Because when you want to adopt a particular methodology to doing what you want to do, you must be able to know that, okay, where am I coming from? What do we need to know? What do we need to do before I can now switch over to this thing that will help me? So fundamentally, we are going through the introduction. So which is the next slide. And the first slide talks about who is an accountant and what is needed in accounting reporting, in financial reporting. One thing I want us to know is that the fundamental system of accounting and finance encompasses several key components. And then this key component, that is for you to call yourself an accountant, for you to say, this is my profession, for you to say, this is what I'm expected to do, there are some key components, and these key components are found in different forms. Number one on the key component is that we must do what? We must know the accounting principles. Like we have been told earlier, you want to make a report about a particular company, you want to prepare the company for would-be investors to show interest in that company. You must know those accounting principles. And these accounting principles are generally designed into two ways. Number one is to look at the generally acceptable accounting principle, which are what are called our gaps. These gaps are what? A set of rules and guidelines that is on financial reporting. You must know your gaps. You must know the latest thing as far as the accounting procedure and financial reporting is concerned. Recently, the Financial Reporting Council has said that some entities, especially the listed ones, must prepare ICFR. And many of us in the accounting profession, we must be able to do what? To know that is internal, the ICFR is internal control over financial reports. So you must be able to know what are those requirements that is needed in order to do what? To be a distant accountant, to be a distinct accountant. Because now we are going to talk about the instruments you are going to use. But if you are going to talk about the instruments you are going to use, you must also talk about the work you need to do to use these instruments on. The whole thing we are trying to talk about today, that there are dynamics, there are changes in our work, and these changes in our work must be done in such a way that every one of us must be happy in doing the work. Every one of us must do the work with accuracy. Every one of us must do this work with speed. So if you are not known, if you are not vast with the various accounting procedure, with the various changes now, it will be a problem. For example, just yesterday, we were told that our IAS 1 is going to change to IFRS 18. How many of us already know that? You should be able to follow the trend that is happening, because it is this trend that you are going to use to do what? To do your reporting. And it is this trend that you are going to use to do. It is this trend that you are going to use to do your reporting. So if it is this trend that you are going to use to do your reporting, then you must be vast. Then you must know everything about what these trends are. So we're talking about those standards, those procedures. So the first thing that you need to be vast with is that it deals with what? Your words, those generally acceptable accounting words, accounting principles and procedure. The next one deals with our financial statements. We must be able, as an accountant, as somebody that definitely you are going to make a report, and you are going to use modern instruments in doing your reporting, in helping people to take a decision about their investment, about their decision. You should be able to know. You should be able to know how to do what? How to know about the balance sheet, about our what? About our financial statement. The financial statement in IFRS, we talk about the statement of profit and loss and other comprehensive income, statement of financial position, statement of cash flow, and all those things. And the ratios, you must be able to do what? To know, have deep knowledge about the ratios, because for every investors, there are things that everybody is looking at for. So you must have knowledge of all these, that is the ratio and every other thing. And in having knowledge about them, it helps you to do what? To be prepared. It helps you to do what? To do so many things that you will do what? You will be able to do what? To know that, yes, this is what is expected of me, and this is what I have been able to do, what I've been able to do. So now when we talk about that, now when you look at the various accounting process that we need to know, No, you must be able to talk about the ledger, the journalizing, the trial balance, and every other thing. And all these things is needed in order for you to do what? In order for you to do what? To prepare your mind. In order for you to do what? To be able to get yourself prepared so that whatever you need, whichever way you need it, the people that are requesting for your service, the people that are requesting for your time, that are requesting for your time and for your service can be well assured that whatever service you are offering them, they are not going to be what? They are not going to be in vain. And I would like to say this, that as an accountant that is going to use modern tools in order to do what? To do financial reporting, to do audit practice, to do so many things. One thing is certain, you must be done with what? With high level of professionalism. We must ensure professionalism. Remember all the I's that are going to be dotted and the T's that are going to be what? To be crossed. As a professional, you must ensure a high level of what? Professionalism. Then they also have a duty of secrecy. Duty of secrecy in the sense that the accounts you have access to, they are not things that you are supposed to do what? To give to everybody. Once you are supposed to do a financial reporting, you will do your financial reporting, and once the financial reporting is done, it is sent to the regulators. It's not for you to now feel that, okay, if it is sent to the regulators and anybody is in need of it, they can now access it through the regulators, and then they can get whatever they want. So there are so many things that as an accountant, as a professional to the core, you must be able to do what? You must be able to do it. And then being a professional, even a professional, also puts onto us some high level of what? Responsibility. Now, we have said that in order to do what? In order to do what? To deliver our work, it must be done with the following level. Because what we observe is that things are being done, they are not done properly. And then, in order for us to now say, yes, we need to do this, we'll do it with what? Number one, with accuracy. We do it with what? We do it with accuracy. We do it with what? We do it with accuracy. One of the basic things that we need to do what? We need to be interested in is what? Is the accuracy. You must be prepared to offer the best of time, to offer the best of interest in whatever you are doing. Everything you want to do must be done with what? With accuracy. So we are in slide 4 now. We are in slide
Doctor,
4.
is it comfortable for you to share the screen, your screen? Because we are not seeing it now. Thank you.
Okay. I was thinking you are going to share it from your end. Okay, I'm going to do that right away. I'm trying to share this screen.
Okay, sorry, doctor. They will need to make you a host. I will talk to them now.
Okay. Okay.
Thank you, doctor. Go ahead.
Okay. So we are in the fourth slide now, and in the first slide we're talking about what has made us, how has reporting been done in time past. Reporting, when it is done manually, is bereft of what? Accuracy. But we need the accuracy. You know, you are going to do reporting, you are going to prepare financials for investors' interests. You are going to do a lot of audits. It requires accuracy. But because of the manual nature which we have adopted it to be, the accuracy level is not there. The next one has to do with speed. For our professional services, it requires us to do what? To make use of speed. That is, doing this financial reporting, this audit service, these financial services requires us to do what? To make use of speed. That is, things can be done. For example, now, we were to do an ICFR for a company recently, and while trying to do an ICFR for a company recently, the head office of the company is in Abuja, and then because their documents are stored in the cloud and it can be easily accessed, all those things were easily taken into consideration. So what we are saying is that there are some things we have done in time past which affected our audit, which have affected our financial reporting, which affected the extent to which we offer the financial services, and those ones are affected then, but we need speed and accuracy, which we have not been able to do. The next one is what? The delivery. How do we deliver? You see, you are doing an audit and you have to do a lot of writing, you have to go through a lot of notes, you have to do a lot of you have to do a lot of notes, you have to do a lot of things, and things are not done on time. The next one deals with global competitiveness. You will observe that when we are doing our audits, our financial services, and our financial reporting, you will see that majority of what we do is limited to our environment alone. This interest of helping some other companies outside our shores, despite having the knowledge about what their accounting standard and principle are, there's a lot of limits to it. And then the next one is also restriction in access to market and institution and instruments. You see, in one of the basic things that we need to do.
Doctor, sorry to interrupt you. Please you can share your slide now. You can share your slide. You have been made a post. Yes, please.
Okay.
Go ahead. Sorry to interrupt you.
Okay. Sorry, I'm trying to do the sharing. Sorry, I will need to do a conversion to Word or PDF before I can share. It's in PowerPoint format. So I will need to do, I hope you can hear me, sirs.
Yes, very well. We can hear
I
you.
hope you can hear me. I will need to do is in PowerPoint, and it's like PowerPoint, the
Yes, we can hear you.
the sharing is not supported. PowerPoint is not supported on the Zoom network. So I will need to do a sort of conversion to PDF before I can share. If you don't mind, I can do that while the, okay, except, okay. Thank you very much. Can you hear me now? Can I continue?
Very well. You can hear you, sir.
Yes, and we can see it.
Okay. Okay. So, okay, the fourth slide, please. That is, no, the one before this. Okay, thank you very much. So we are here now, and we're talking about the way things are before we get into digital transformation of our audits, financial reporting, and then delivery of financial services. And we said that what we are expected to get is to ensure we have accuracy, we have speed, we have delivery, then we have global competitiveness, we have direction, at least orientation in access to markets, and then a lot of things. Then another area, issues that we have had before the introduction of digital connection is the issue of currency challenges. You want to do one or two things as far as the audit or financial reporting or financial services is concerned, like investments and a lot of things, and you're having one challenge or the other. The next one is the language barrier. There are so many language barriers because majority of what you are intending to do, you are not be able to do or to use the language of which the company might be interested. The next one is trade restriction. We know a lot of trade restriction that is hindering investment, that is hindering these angel investors or whatever investors and so on and so forth. So we have all these restrictions, and then we also have the envelope transaction. When we talk about envelope transaction, we are talking about a pocket of restriction. You can't do this. This is the amount of investment you can do in another country. This is what you can bring to this other country. So we have all these issues. And then lastly, inability to do what? To deepen greater what? Opportunity. So we have a lot and a lot of all these challenges. And then having these challenges tells us that, yes, life is not all about the challenge, but the solution which you bring to life. That is the most important thing. So let's move to the next slide, please. The next slide, please. Now, the key solution is to go through transformation, and going through this transformation and the need for transformation in accounting and finance is driven by several factors. We have said a lot of things that is bedeviling the need to offer a very concise financial reporting, financial auditing, and financial services. And we have outlined them in the previous slides. And we said this in terms of the market, in terms of the language, in terms of the currency, in terms of the competitiveness, in terms of all these things. And there are restrictions. But in order to, there must be a way out of this restriction. And the only way out of this restriction is what? Is through what? Transformation. That is, we must move from one level to another. How many of us know that before as an accountant, there are some restrictions you can do. There are some restrictions to you in terms of the way you do your audits. But we need this we need this transformation. Like they always said that the only permanent thing to life is what? Is change. And as an accountant, as a finance person, you must be ready to do what? To be part of these changes. Now, if these changes and transformation is going to take place now, then we are going to do what? We are going to see those key drivers of those changes. Number one of the key drivers of this changing is what? Is technological advancements. Technology is changing. And once technology is changing, the accountant must move. The finance person must move with the technology. We shouldn't be the one that the technology will come and meet and leave us behind. We should not be the one that when we are talking about cloud storage, we're talking about fintech, we're talking about AI, then we are not there. You should. In fact, having the ACA, FCA certificate is not enough. You should be able to take a course in fintech. You should be, even if it is a specialized course, take a course in fintech, take a course in AI, take a course in digital transformation that can prepare you, because the accountant, like I've said at the beginning, that whatever we do, no matter the amount of money anybody needs to invest anywhere, there will still be need for an accountant involvement, because they are going to prepare financials. You are going to prepare financial statement. You are going to get the cash flow of those companies done. And if you are going to get the cash flow of those companies done, you are going to do a lot of things. Then that means you have to be technologically savvy. What about our technology department? If you are not the one that is technologically inclined, you are abreast of what is happening, so many things will be done. And while they were doing those things, you will just be taken unaware. And once you are taken unaware, the whole thing will go away. And at the end of the day, you are worse off as an accountant, as somebody who wants to be part of the transformation. You must be able to be vast with technology, so that those things, there's a lot of fraud that is happening today. Why are those fraud happening? Because those people that we were supposed to be the accountant, to be the chief internal auditor, they are not doing enough. People are manipulating things. So one of the key drivers of what the transformation will be to our audits, to our reporting, to our offering of financial services is what? Technological advancement. Technology is on the move. You see some little children, the way they handle their phone, and it will be surprising that an accountant who is vast, who said is vast in his area, cannot handle even the phone. Even the phone cannot handle whatever comes out with. And we cannot handle the system, cannot do anything that is beyond the normal, thing. It's beyond the normal thing. So you must be able to do what? You must be able to do what? To drive transformation in financial reporting, in accounting, in delivering of financial services through technological advancement. The next thing that are the key drivers of what our transformation should be is what? The changing regulatory requirements. Regulations are changing. Before, there is nothing like ICFR. Before, there is nothing like change from IAS 1 to IFRS 18. Before, there was nothing like what? There was nothing like IFRS. But we grew to that regulation. But we grew to that reporting pattern. But we grew to that. And as we grew to all those things, the regulations are changing. And if these regulations are changing, then you too must be abreast of this regulation. The next one is what? Is the customer's expectation. You see, the customer's expectation, we are not talking about even individual customers now. We are talking about both corporate customers and individual customers. Corporate customers, in the sense that nobody is waiting for you to come and spend 3 months to do the audit of their words, of their financials. Nobody is ready to wait for you to spend the whole time because you want to drink a cup of tea and stay by one table and say, bring this document, and those documents will be falsified. Nobody is ready to say, okay, go ahead and do what, and get the reports, get the financial statement from this bank. We were doing ICFR for a company, and the company, the letter has been sent to that bank. We look at the letter that has been sent to that bank, and then the bank was not responding. But digitally, we were able to retrieve the accounts, and the accounting processing, the audit processing is going beyond a place whereby you have access to all these reports, to all these financials without anybody even falsifying things and bringing things for you. And then you could easily do so many things because of the way the technology has been done, or the way this has been done. So there is this customer expectation. The next one is the competition. If you don't do it, if you are not technologically inclined, if you are not going with current trend in what is expected of you in technology, then your competitors will just sweep you aside. Apart from the fact that regulations say, okay, 10 years you can do an audit of a company according to code of ethics and standard, you can do an audit of a company for 10 years, and after 10 years you can go. The company might be patient enough for you to wait for 10 years because they feel that things could be done faster. After the 10 years or so, they could find you a way, and the other people will come. And when other people will come, what are those competitiveness? There's a lot of competition, especially in audits and reporting now, that it requires you that if you are not up and doing, your reports will be delayed. The speed with which you do your reporting will not be done, and your customers will express their displeasure about you. Then the last one has to do with data management. Transformation brings to us data management. You will go to some company, and then when you go to some company, and then you ask them for their data, and then they cannot single-handedly bring the data on time. But what do we observe today? You don't even need to, sometimes those days when you say there's a fire in a particular place, and then you want to do an audit, they say, oh, sorry, we have a fire outbreak, and majority of our documents is gone, and we're not able to provide it. So no, but data management today says that you must store. You must have cloud storage. You must have cloud computing. You must have cloud storage. And this cloud storage will help you to do what? To easily do what? Find a way to get your what? You'll retrieve your data, and it helps you in what? Data management. So one of the transformative way, or the key drivers that we experience an accountant to be inclined to is what? Is data management. You are the chief accountant of the company, you are the chief technology officer of the company, and you're an accountant, and they ask you for your data, and you cannot provide it. And they keep saying they are complaining about you. But no, your data at this level, you should be talking of storing your data in the cloud. No, that fire can never affect, water can never affect, destructive tendencies can never affect. So that is part of the key drivers of our transformation. So the next slide, please. The next slide. The next slide, please. Now, when we do transformation, does it bring to us anything? We are talking about transformation. We have seen those key drivers of transformation, talking about the technology, talking about the competitiveness, talking about the regulatory input, talking about the data management. Those are the key drivers of the transformation that is needed in our company, is needed for what? For an accountant. And we said that once all these things are in place, then we can boldly say that, yes, digital transformation interest is being carried out, is being implemented by an accountant. So what are the benefits of this transformation? Number one, it's increased efficiency. If you want the best and the best of efficiency, you need to do what's digital transformation. the best of the efficiency is what? Through transformation. We're still going to talk a lot about digital transformation. Then the next one is that it improves accuracy. When you have your data with that cannot be that are not subjective, but are very objective, then you have what? You have a wonderful accuracy. The next one, enhanced decision making. Do you know that one of the basic things that transformation from those manual analog way of doing our financial reporting, of doing financial investments and audit, that will put to us is inability to make decision, informed decision. We've talked a lot about investments this morning. We talked about the various investors, and they need to make decision. If you are not on the transformative level of being an accountant or a finance person, you will not be able to meet up with the demands that the investors want. You are the chief accountant of the company, and they want to look at the financials, they want to look at various, even the management accountant, on how your processes are, and then they cannot get it right. Then it will hinder the level at which decisions are taken. But for you that have been able to do what? For you that have been able to do what? To do things in a normal way, then you should assure that things are going to be done in such a way that you will be okay, with it. And that tells us one thing, that one of the basic things that we enjoy from transformation in the accounting profession is what? Enhanced decision making. You can take your decision. You can move. At a distance. The next one is cost savings. Digital transformation itself brings a lot of cost savings for us, and it improved customers' experience. Why we have done this, apart from the benefits that we get from transformation, what other opportunity that it gives us is that it will help us to do was to develop new business models. We have a lot of business models that we can develop, apart from going from the engineering business model, to the standard business model. 1,001 business models that we need to do. It is only this transformation that we can do what? That we can get done. That is only do this transformation that everything can be done. And then this gives us a lot of what? This gives us a lot of what? A lot of things to be done. And giving us this to be done means that the things that we have done, and then they come handy, and when they come handy, you are able to do what? You are able to do a lot of things. Now, we have talked about the opportunities that we have in digital transformation, but now looking at areas of transformation. Now, number one area of automation is what? Is process automation. Number one area, we have been talking about transformation. We have been talking about moving away from analog way. We have been talking about moving away . Hello, can we have the screen shared again? Hello, can you hear me?
Yes, I can hear you. Go ahead.
I want the screen. The screen is not shared again.
You are still the host, Doctor. You are still the host.
Okay. but I can't share because of the format in which but somebody shared it.
Okay. I think they are doing that now. Thank you.
Okay. So let's move to slide 7. The 7th slide. Can we move on to the 7th slide? Okay, yes, thank you very much. Now, we have been talking about transformation, and we said we are moving from the analog, from the manual way of attending to our financial reporting, to attending to our financial services, to attending to what? To audit services. And then we have said that the only way to this is to do what? To look at those challenges, and those challenges in terms of language, in terms of everything, they are things that have not made the accountant to be better. Then the next thing to do what is to find a way of transformation. And we said when we are doing transformation will be done in a lot of ways. So we have looked at the benefits of transformation and the opportunities that this transformation will give unto us. Now, let's look at the areas of transformation, areas for transformation. Number one area for transformation is what? Process automation. Your process must be what? Must be automated. Automating routine tasks. You see, you need to sign some vouchers. You know, the day we are now has gone beyond the day that you are going to be using paper to sign voucher, to prepare your financials, to do your trial balance, to do your management reports, to do a lot of things. And then you are carrying paper here and there, you are taking ledgers, you are bringing out ledgers, you are doing one voucher or the other. No, your process must be what? Must be automated. Whatever routine task in terms of approval, in as much as we talk at the beginning that we must know those generally accepted accounting principles. And then in as much as those things are in place and you have your operational manuals in place, the next thing you are going to do that will help you to be a transformer accountant, to be a transform financial advisor, and offer the best of financial reporting, financial audits, and financial services is to do what? Is to automate your routine task. Why should it take you? Somebody is not on the road. Somebody is not in the office and your work is stopping. No, you should be able to digitalize every of your process, every of your routine tasks. In terms of you want to do reconciliation, you don't have to go to the bank to do what? To get the statement of account. Your statement of account should be so digitalized that you can download it on the system and then you're able to do whatever reconciliation you are going to do. So the number one way in which transformation is going to be done is what we call the process, is process automation. Every of your routine tasks must be what? Must be digitalized and then must be what? Must be processed. The next one is digital payments. You see, digital payments, your payments now should be within a twinkling of an eye. Fintech has provided this opportunity for us to do a lot of digital payments, to digitalize our payments. Your payment should be digitalized. You shouldn't be the accountant that, because this person is not here to sign the check. No, accounting profession has gone beyond. So you are waiting for somebody to sign a check. Every of your payment process should be what? Digitalized. Then the next one is what? Data analytics. What do you use your data for? We have talked about storage of our data. Your data should be stored in such a way that you will request for it and within the twinkle of an eye. What if somebody has been doing this, you have done this filing, have done that filing, and then the person is not around to help you, or the person is not there to do a lot of things for you, and then your work is being stopped? No, we must do what? We must take care of our data and use it appropriately. Then the next one is cloud-based solution, adopting cloud-based accounting and information and financial solutions. There are 1,001 cloud-based accounting solutions that we can adopt that can help our processes to be okay. And the next one is what? Cyber security. You see, where it is not all about gathering these data, storing them in what? In the cloud. You must also develop a cyber security. Like I said, that I was to do an SFR for a company recently, and fine, they had their data stored in the what? In the cloud. And I asked them, what data security do you have? What data security do you have what data security do you have? What cyber data security policy do you have? Number one, they don't have the cyber security policy. Number two, they don't even believe that they can be attacked because they believe that their system of work, nobody will be interested in. No, we shouldn't think that way. We should be an accountant that is thinking forward, that is thinking ahead. You should be able to develop a cybersecurity policy for your organization. And apart from developing this cybersecurity policy for your organization, you should be able to follow it up to the letter. To the extent that if anybody comes and then they want to know and take care of whatever your cybersecurity policy are, you will be able to do what? To give it to them immediately. Overall, transformation in accounting and financial services is essential to remain for us to remain competitive, efficient, and in today's fast-paced digital economy. And the only way to go is through digital transformation. That is, if you look at what is happening, if you look at the requirements, if you look at what everybody is needed to do in the accounting profession now, you will discover that the only way to go is through what? Is through digital transformation. Because digital transformation, look at where we are coming from. The first thing is to know those basic accounting principles, accounting standards that is expected for us, those financial statements that are expected to do or to produce here and there, and so on and so forth. Then we move on to the need for transformation, and we see the benefit and the opportunity for the transformation. Then we now look at the areas in which transformation is needed. Moving from the areas in which the transformation is needed, we know that the only way to go, the economy is growing, the market is becoming widening. There are 1,001 investors that are coming around now. They are interested in the country. And if your financial reports, if the financials of the company people are going to invest on is not being adequately prepared, is not inadequately prepared to meet the needs of these investors, how do you intend to go? How do you intend to manage it? Are they going to ask you for one thing or the other, and you are running letter scatter to get them, or they are not documented in such a way that will follow the principle and the guidelines of the regulators? And at the end of the day, you will not be able to meet the needs of these investors or meet the needs of this regulator. So the only way to go about this is what? Digital transformation. What is digital transformation? Digital transformation is the process of leveraging digital technologies to fundamentally change how accounting processes operate, and we deliver value towards our customers and achieve our various goals. That is, if you're talking about digital transformation, it talks about the process of leveraging, of adopting, of adapting, of making use of what? Digital technologies, which will fundamentally affect our accounting processes, which will fundamentally affect our audit processes, which will fundamentally affect our accounting, our reporting processes, which will fundamentally affect our financial services delivery, but in a positive way, to ensure that we cope with what is happening in the digital world. Digital transformation is essential for businesses to remain relevant, competitive, and also what effective in today's digital world, in today's fast-paced digital economy. That is, if you want to do what? If you want to remain competitive, if you want the companies to continue to be listed, let's go to the next slide. The next slide, please. If you want your company to be the one that everybody will do what, will be the eye of all the investors, will be the eye of everybody, then you need to do what? You need to do what? You need to digitally do your business. The next slide, please. The next slide. The next slide, please. The next slide, please. The next slide, please. Thank you very much. Before we go into the next slide, somebody has asked a question. How do you convince a client who has decided to remain in analog without changing to digital way of his reporting? Thank you very much for that question. You see, one of the basic things in life is that nobody is willing to change. But unfortunately, the only permanent thing in life is what? Is change. We are always ready to be in our comfort zone. And why are we in this, our comfort zone? Because we are not looking beyond our nose. We are not looking beyond the immediate, we are only looking at the immediate gain. We are not looking at they call it one-step gain from your current way. You see, you are looking at where you are. You feel this is the best way you can offer your services. This is the best way you can do your reporting. But in order to now help such clients, number one thing is that you will allay their fears from this digital transformation. You have to tell them that, yes, this digital transformation will not harm you, because why would somebody say he doesn't want to move from analog to digital? Because he has a fear. So the number one thing is that you must do what? You must allay the fear of that person. Try to let him know that, no, there's no problem. You doing this will not expose you to any danger. Doing this will not give you any problem. Doing this will not create problem for you. You have allayed the fear of that person. That's number one. Number two is to now tell him the benefits of doing of the transformation. Sometimes some people don't have a fear, but they don't know the benefits of the transformation. They don't know the positivity about the transformation. Tell them the benefits. Tell them the positivity about the transformation. Tell them what they intend to gain from this transformation. That's number two thing to do. After you have allayed their fear, you tell them the benefits of this something. Then do a proposal to show that deploying this digital transformation will help them to be better off. Apart from the fact that you tell them the benefit, do a proposal. Oh, you are doing your reporting so way, and we are continually being penalized by the governments, by the regulators. Why don't we adopt this so that things can be faster? And when it's faster, you will do your report on time. You'll be able to get your customer, investors will come. You see, you have moved away from allaying their fears. You have told them the benefit. You have not drawn out a proposal to show that it is what? It is beneficial to go that way. And lastly, the last thing you have to do is to do what? Is to not tell them is to not show them the cost benefit analysis. Do it apart from doing the showing them you do the benefit analysis to show that the cost of doing that thing, the benefit in that thing is more than the cost. Because sometimes it's not that they are afraid, it's not that they don't know the benefits, it's not that they have not told them what they have to do it, but they are looking at the cost. A lot of us look at the cost, but let them realize that the cost of doing that thing is far, far lower than the benefit. And I'm sure when you do this convincingly, then the thing you have to do is that when you are presenting something to somebody, you should present it passionately. You should present it to the soul of that person. Let him know that, sir, this is what we have done, and we have not done it very well. And then this is what we intend to do. This is the digital way we intend to do. Look at all these boys that are coming to do what? To see your money, and they sign the check. Look at what the former accountant here did. But why we do this? With the thinking of an eye, this is the safety needs. And I'm sure the person will buy into the idea, the idea that you are bringing. Now, we are going to digital transformation. Digital transformation in accounting and finance is revolutionizing the industry by leveraging on what? On technology. And by leveraging on what? On technology. That is, you are using the technology to do what? To drive the way you want things to be what? To be. And using the technologies to do what? Shaping the way you do your audit report. Shaping the way you do your financial report. Shaping the way you deliver your what? Financial services. And then there are technologies that we need to use in order to do what? To do your digital transformation. Number one on this technology is what? Is AI, that is artificial intelligence. When you talk about artificial intelligence, we're going to see more of that. AI enhance decision making. AI enhance decision making. What is AI? Artificial intelligence, computer-based intelligence, computer-based solutions to your problem. Why do you have to think and do things and do it in such a way that you will not be able to get a solution? Why don't you deploy AI? Fast way. AI brings the solutions to you. So number one of those technology that we need is what we call the artificial intelligence. And what does artificial intelligence do for us? It's help us to do what? In decision making. It does what? Automates tasks and improve customer service. And then it also helps us to do what? Detect fraud and also predict credit risks while optimizing investment strategies. AI does so many things for us. AI does so many things for us. It helps us to do so many things. It automates so many things, detect fraud, help us in investment, and improve our customer orientation. The next one is what we call blockchain. Blockchain technology enables secure, transparent, and decentralized transactions, which will in the long run lower transaction costs and also to secure our financial records and what compliances. And the last one there is what we call fintech, that is financial technology. Financial technology provides innovative services to technology like mobile banking. And these are things that we need to use in order to do what? To drive our accounting processes, to drive our audit reports. I mentioned earlier that there are times that you are trying to get the statement of account from a particular company and then from a particular bank, and one way or the other, they are not too fast about it. They creating the problem of speed for you. You can easily do a lot of downloading online now that can give you factual, real-time accounting statements that is beyond what the people are not able to provide for you. And they are not adulterated. They are not things that can be manipulated. They are things that you have at the tip of your finger, and fintech has provided it for us. And it's part of the digital transformation that accounting process, audit reports, and financial reporting are supposed to do what? To comply with. And then we're talking about the financial fintech. Now, you see a lot of processes, a lot of services, a lot of processes, a lot of services, a lot of interest that have been taken over by fintechs. Today, you can do lending. I'm not talking about those Shylock lender, the loan something. We have various banks that are deeply involved in online lending. Instead of you to go and sit down in the office, and you're trying to fill this form, you're trying to do that form, you could access your loan on time. And that is what fintech does for us. You can create a company, and then the accountant doesn't really have much stress to go through, because the volume of loan that is given, the interest on it, everything, you can easily download it, because the fintech has provided ways and means for you to do your businesses without going through any problem, but digitally complying with whatever you want. That is on lending. What about services like e-insurance? Fin insurance is there. You can do a lot of things, not only for you to buy that services, but for you to also get the report of those insurance that's needed for you when you are doing your works, when you are doing your procedure, when you are doing your audit procedure. There are so many information you need on the insurance of the company. You can easily get them online. You can get them real time because all the insurance policies are now digitalized. That is part of what that's part of what fintech offers our financial reporting and financial audit and financial services processes. And then there are lots of traditional financial institutions too who are offering one service or the other in terms of business advisory, in terms of forex, in terms of so many things, in terms of housing, mortgage, and all those things. And fintech is going to offer them. You don't even need to stress yourself. All you just need to do is to do what? Is to comply with what the organization wants, and then you're able to get your words, you're able to get your information. So those are the key technologies that we use in order to do what? To do digital transformation. And we talk about artificial intelligence, we talk about blockchain, we talk about financial technology. What impact do they have on our finances? Number one, they will enhance customer experience. They will enhance customer experience. They will enhance customer experience. They will do what? They will improve efficiency. That is, when you automate, it improves your what? Your efficiency, and it increased security and what? And protection. Like your blockchain now, your password. You see, blockchain creates a level of security for you. That is, all these chips and all those things. That is, you have the opportunity to do what? To create a security for all your resources. All your resources doesn't need to be exposed. Blockchains give you chips, give you access, give you control, so that nobody can take advantage of what you are protecting or what you intend to do, what you intend to do, to keep. So those are the benefits of what? Of using all those technology for what? For your reporting. And lastly, regulatory compliances. You see, when you digitally undertake the transformation required in your business, it helps regulations. In fact, what we have done now and what has been done now is that there are what we call the spot checks. Spot checks in the sense that majority of the companies could have their accounts linked to their regulators. And once they have their accounts linked to their regulators, the regulator doesn't even need to come to the office. They could easily do a spot check on what are supposed to be the things you are going to report. And once you do that, then you are able to do what? You are able to do so many things. So instead of regulators pursuing you and there is a lot of manipulation of your report of so many things, your companies can do what? Can be digitally inclined, can be digitally integrated in such a way that you'll be able to do what your regulators are looking for, and you do it with minimal stress. The next slide, please. The next slide. The next slide, please. Okay, now, the previous slide, please. We have slides. The previous one, please. Okay, so we have seen the impact, and we have seen that. Okay, the next slide, please. The next slide. The next slide. Okay, now one thing that we need to know is that adopting all these processes, adopting all these information digital transformation technology have their own benefits for accounting professionals. Number one, strategic decision making. It helps us to do what? To take strategic decision, because the whole processes in audits, in financial reporting, depends on the accountant. And once it depends on the accountant, then you should know that the accountant's is at a vantage position to take a decision. So it helps us to do what? To take strategic decision. The next one is to help us to data-driven insight. It helps us in gathering and keeping our data, and upskilling accounting professional who must master data analytic tools and use technologies like AI. The way we do our processes, the way we do our reporting, the way we do our financial services and advisory will definitely change with what we are doing when our digital transformation is what is implemented. But one thing is that while trying to do this digital transformation, the chances are there that we may encounter some problems and challenges. So we're looking at the challenges that we may encounter. And why we are going to talk about the challenges is that we must be prepared for these challenges. You don't have to be taken aback. You don't have to be taken surprised by these challenges. Number one challenge is cyber security. You see, despite the fact that it is appropriately good to engage in digital transformation, you should know that there is a complex risk of cyber attack. And then as a result of this complex risk of cyber attack, you must be able to do what? Do your processes in a very tight fitted way. You must not allow any exposure that will endanger attack on your resources. The next one is regulatory complexity. Regulatory complexity in the sense that it's evolving regulations will make you to be to adapt to different regulations. Different regulators, for example, like the banks now, you have a lot of regulators coming to check their book. So you must be prepared for the different regulations they are going to bring, because the dynamics of the digital world shows that things are happening, things are fast changing, technologies are changing. You must be able to adopt the technology that your regulators want, because regulators need information. If regulators say that, oh, we want to integrate all your accounts in which they can have access to this project, find a way to do it and implement it on time. If they say there is going to be a back-end report that must be submitted on daily basis so as to counter whatever anything they want to do, you have to give it to them. So there is complexity for the regulators, and then we must be prepared to do what, to attend to them. Then the digital literature challenges and stakeholders need. Your stakeholders in the company, from the shareholders, from the business people to the staff, to everybody that is involved, the publics, your customers, your fund providers, you must be able to do what? Everybody comes with his own different needs, and each of them must be attended to in order to do what? To ensure that your digital transformation is to a higher level. The next slide, please. The next slide, please. Now, having seen that now, the next thing that we are going to talk about is the business process. And then in the business process, you must talk about so many things that will help you in order to do what? Now, we are talking about the digital transformation. And then since digital transformation is revolutionizing something, you must use a lot of what? Of technology. Now, in order for us to do what? To use a lot of what? Of technology. We must use different technologies in order to do what? To drive our digital transformation. Now, let's look at those technologies. Number one, accounting software. It is very, very saddened that a company that is doing businesses to a very large extent will still be depending on Excel. Why do you have to depend on Excel? I know a company recently, a very big company, at least medium-sized company, that was trying to go on Excel, and the accountants keep having issue. But you can make use of what? Of accounting software. There are different accounting software. No matter how small your business is, you should instill it on the owners of the business that we are better off, we are more accurate, we offer services with speed, we offer competitive services. When we do what? When we adopt types of accounting software. The next one is what we call the robotic automation, the robotic process automation. You see, you will not believe that using RPA and robotic process automation to automate repetitive tasks. One of the basic digital transformation we can do now is to use robotics. It has been developed to do what? To do so many of our processes. Prepare ledger, prepare account, do a lot of financial reports, do a lot of things, and all those things. And you know, when all these things are being done, you need to allay the fear of people. You know, like I said earlier, that one of the major challenges that people will have is that, oh, what's going to happen to my business if this is done? You need to allay their fears that the robots you are going to adopt will help you to do what? To do your process. I was in touch with one of my students in Canada, and he told me that, in fact, an accounting student, and he told me that majority of what they do now, robots do it for them, and then they just do at the back end and tidy up the whole thing. So it is not out of place in order for you to be digitally transformed to use what we call robotic process automation. Then the next one we have talked about the artificial intelligence. We must leverage on what AI to do a lot of things, and then we must use machine learning using ML to predict financial outcome. You see, with machine learning, you can do a lot of simulation. They have talked to us this morning about investment. And then when you are doing this investment, you will think you are doing this investment just for doing sake. And then there is a lot of things that may be hidden while you are doing the physical inspection of your investment. But you can use machine language, and machine language can do a lot of prediction for you, can simulate. And then, you know, because of there are many scenario-based machine language that you can use that can do a lot of prediction for you beyond what you are seeing. Why do companies get into a problem in their investment today? Because they are looking at the physical, they are doing a sort of physical examination of the assets and the liabilities. And at the end of the day, there are so many things that are hidden. But digitally, you can do a lot of things. You can do a lot of simulation. You can do a lot of things. And those things will help you to do what? To make your investments to be what? To be what it ought to be. And then as a result of it, you can do what? You can digitally transform your businesses so that wherever you put your money, you are sure. In fact, you can do a lot of scenario-based simulation. What if the government said they are going to increase the capital base of the company? What if the government said they're going to close down these businesses? What if the government said, because some of those things that cannot be done manually, cannot be done physically, will be digitally done. And this is done through machine language inputs that can do a lot of simulation for you, that can do a lot of prediction, that can do a lot of foresighting beyond human knowledge. And that is why the place of machine language and artificial intelligence comes from, which the accountants can adopt in order to do what? To digitally transform and do a lot of things as far as their audit reporting is concerned, financial services reporting is concerned, and application of the financial services to whatever their customers need. The next slide, please. The next slide. Now, we are talking about the automation, and we have seen what the automation will be. Now, when we do automation, we have said it's going to do a lot of things: increase efficiency, improve accuracy, enhance compliance, save our costs. Then another thing that digital transformation will do will also be in our financial reporting. Financial reporting in that it will eliminate completely manual data. It will do what? Manual data collection is no more there, and then you can report accurately. It improves accuracy, and it's able to make real-time automated decision on whatever you want to do. Then for our audit practice too, is streamline audits, and then the process is done without anything. Then it improved compliance and it enhanced risk assessment. Do you know that digital transformation, use of machine language, use of AI, use of the automated machines and the fintechs will help you to do your audits properly. There's a lot of things that we have done in audits that we shouldn't try it again, because the level we are now, if we do that, it's going to create a lot of issues for us. And that is the issue of depending solely on those physical things. Ensure the companies have access to cloud storage. Ensure they have their payments are digitally done. Ensure the account preparation and processes are digitally done in compliance with the gaps and the various standards. And as a result of that, once you have this digitally done, you can easily assess and make inputs and do your audits within a very fast time, and they are done accurately. The next slide, please. The next slide. Now, the financial services, we are looking at what automation does, what digital transformation does. It increases efficiency, help us to reduce costs, and scalability and flexibility is also done. And then in financial services, blockchain technology does offer several benefits that will make our finances to be encrypting, and the back end is always safe than expected. Now, the benefits of the blockchain in finance. When you adopt blockchains in finance, it helps you to do what? To decentralize and ensure secure transaction. Why do you need blockchains in your transaction? Because you need your transaction to be secured. And in securing this, you have to make use of what? Of your blockchain. It increases transparencies and ensure that your costs are reduced while the trust is increased. Why do we have issues with a lot of reporting, a lot of our financial services today? Because the trust is not there. You discover that majority of those items and data that you have used to take your decision, you find it elsewhere. But when we use blockchain and we are really securing them, then we know that things will be done appropriately. The next slide, please. Now, application of blockchain in finance. In order for us to ensure that we implement the blockchain, blockchains enable fast, secure, and low cross-border transaction. It helps us in doing cryptocurrencies, not only to get involved in cryptocurrency, but also to report issues in cryptocurrency like Bitcoin. We have a lot of things that's been done through blockchain, and it can help us for smart contract. That is, there are blockchain-based smart contracts which are automated in order to do what? To give us secured information. What about supply contracts? You see, when you are into some businesses, especially in supply contract, like all these our delivery companies, there is a way you would digitalize the transaction in order that it cannot be what? It cannot be accessed. And when it cannot, when it is not accessed, the people who are going to do the accounting reporting of the transaction will do it easily, and everything is done through the use of what? Of blockchain. And it has a lot of its own benefits, which, if adopted, is going to be one good or the other for us. The next slide, please. Next slide, please. Okay, now, artificial intelligence. Now, artificial intelligence, we have talked about blockchain. Let's talk about artificial intelligence as we go towards the end of our discussion. Artificial intelligence enhances decision-making, automates tasks, and improves customer service through chatbots. It also detects fraud patterns, predicts credit risk, and optimizes investment strategies. Artificial intelligence is revolutionizing various industries, including finance and accounting. And how does this is done? When you are talking about artificial intelligence, you are talking about a sort of digital transformation that can help you within a twinkle of an eye to get information and to make decisions and to automate tasks and improve customer services through chatbots. You can see majority of our banks and our companies now, they have chat boxes. These chat boxes will give responses, whatever problems the company is having or the customer is having. The AI can easily get the information that we need. If you go to Zenith now, it has its own. You go to majority of the company, and as an accountant, this is what we should encourage our companies to have, because it transforms what? It transforms our businesses. So how does AI work for us? Number one, data analysis. No matter how large your data is, if you expose them to AI, it will be able to solve your need for that data. Whatever things you need in the data, whatever things you need, it will get it done easily. So AI works by ensuring that your data is analyzed, no matter how large the data is. Number two, predictive analytics. You see, we are talking about investment, and then you need to take a lot of decisions as far as your investment is concerned. And in taking this decision, AI will help you to take decision. Remember, either you are the one investing or the one they are investing on. When you predict, which is done by AI, it will just give information and you'll be able to solve whatever problems that they are having. The next one is to do what? To automate different tasks. And these tasks are done through process automation, data entry, chatbots, and personalization. In fact, AI has gone to the extent that pick your phone, go on the chat box, problems that you are able, that would have taken time for the company to solve, or for the accountant to solve, or for the accountant to respond to the inquiries, are done within minutes. And this is done by what? By artificial intelligence. The next slide, please. Now, we have talked about AI, and we have seen a lot of things that AI is supposed to do. And AI is supposed to do. And then one of those things that we are saying further is that AI also helps us to do what? To detect fraud. Because no matter how high the frauds are, AI will be able to do what? To help us to do what? To detect the fraud on time. Okay, thank you very much. Somebody has asked a question. Thanks a lot. Okay, that is, okay, how to get the blockchain, the machine language, or the AI, and then the practical guide to doing this thing. Now, I'm going to just run through this, then we talk about that. Now, then AI helps you to anomaly detection, risk assessment, credit scoring, and risk management, and help us to optimize our investments. Now, One thing I want us to know is that AI is artificial intelligence, and their boxes, their digital technology and machine languages, machine systems that are being built that you can easily use in order to do what, to get information. But someone has asked a lot of questions on the use of blockchains. We have different companies that offer these services. We have a lot of technological companies, and that's what we have said, that in our accounting, financial reporting, in our audit services, in our financial services delivery, we must ensure that we must input technology to whatever you are doing. So to start with, when you are deploying or establishing your accounting processes through the manuals, through when you are setting up the accounting departments, or you are the type that want to offer financial services, you must integrate whatever you are implementing with technology. We have different companies. We have them online that offer different services. We have different companies that also offers you accounting packages to whatever industry you are. And deploying those things will help you. We have a lot of machine languages online that you can download that can help you. But some of these things are software. Some of these things are apps that sometimes you will need to pay in order to make use of them. Some of them, they will give you a free period for you to make use of them. And after that, they will expect you to do what? To pay. Most of them are not free. But blockchains, then we have a lot of companies that offer this technological assistance in terms of blocking, in terms of encoding your processes. That is, when those accounts are department have been set up, you must do a lot of encoding. And technology companies, they are online, they are everywhere. That can like flutter wave technologies, like all these different companies. Some even will help you in order to do what, to do a setup of your accounting processes, and they will digitally do it. We have a lot of companies that are doing cloud computing, cloud storage, and they are everywhere, and they help you to do this setup. But the most important thing is that we are doing a lot of digital transformation. That is, when you want to start, ensure that all these are incorporated into your accounting process. Incorporating them into the accounting process before we start will go a long way to help us, so that we can easily do a lot of things easily, with speed, with accuracy, with global competitiveness, with doing it without any issue. And through that, you can easily get there. Now, let's look at the fintech. When you're talking about the fintech, you're talking about the use of technology to provide services. And this technology to provide services will go a long way, because the financial industry is going to be revolutionized. How many of us that we are here and we are only satisfied with, we have done accounting, we are FCA, we have done ACA. Having an accounting knowledge will help you to do a lot of things. Once you have learned this accounting knowledge, go and learn technology, go and learn coding, go and learn a lot of things. It helps you to now build software that people can buy. I'm making recommendation that you need this software, you need that software to do whatever you want to do. But from today, it should be noted that for us, an accountant, we already have the accounting knowledge. Let us learn the computer knowledge, match them together, and we will sell. Why should an accountant say, I don't have business? The institute did not provide us food to eat, did not give us jobs. You have jobs at the tip of your finger. You have learned the accounting. You know about the principle, you know about the gaps, you know about the IFR software
training. Hello. Hello. Hello.
Hello, doctor.
Hello?
We can hear you.
Hi,
Doctor,
sir.
we can hear you.
Hear you now.
We can hear you, doctor.
Okay,
Go ahead,
doctor.
please.
Yes,
We are with you.
doctor.
Oh, sorry, I didn't know I was cut off. So we were talking about the use of the fintech, and we are looking at what the accountant will know, and the accountants only know how to do what, to do the accounting process. As an accountant, can you take your time to go and learn coding, to go and learn development of software, to go and learn about how to do some little accounting packages in technology? And when you learn them, you offer these services, people come to buy it, because the age we are is the age of technology transformation. And if this transformation is going to take place, you start with each and every one of us. And the majority of these will definitely do what? Will do a lot of things. What about the fintech, like we have talked? There is a lot of apps that has been done now. All these things doesn't take us any big deal to learn. But we mustn't be lazy. We must rise up from this training. We did not just attend this training because we want to digitally transform our companies, but to digitally transform ourselves, to know that there is a lot of machine languages that can be learned, to know that there can be a lot of coding that can be done, to know that there have been a lot of computer languages that can be learned, to know that we can do a lot of things, apps, software that we can provide. And once those are provided, a lot of people buy it for us. They are minute things. Nobody is too old to learn, and nobody is too do what? Is too young to learn, and nobody is an island of knowledge. The knowledge you have about the accounting process, you can build on it and do more to yourself. Because when you're talking about blockchains, talking about AIs, talking about your chatbots, talking about your fintech, talking about digital transformation, it comes with a lot of sacrifices. But once you are able to do that, the future of life will be those who are able to offer the services. A lot of people are interested in one service or the other. Once you offer this service, you will definitely be the talk of the time. You will definitely be the people that people will definitely be consulting. Why are people running after some people? Because they know that they're offering the services they want. So we must ensure that rising from here today, we need a lot of investment. Are you going to, you know about investment, learn about the developing an app to do an investment. People who want to do investment will apply to, will buy this app from you, will buy these packages from you, and they will use it for their investment. So you are digitally what? You are digitally transformed. The next slide, please. The next slide, please. And once this is done, and then you do what? You do a lot of things that will happen. Why is it that many young people in some of these advanced countries are better than us? Why are they adding value to the economy? Because their interest in digital transformation is something that is what? Top-notch. And then as a result of that, we know that we'll do a lot and a lot of things for us. But one thing I want us to do is that today is not all about you, all about your company, but all about you. That, oh, I attended a program, and in the program, my eye is open to the fact that as an accountant, I can learn coding, I can learn development of apps, development of packages, and these packages, I can learn them. If you can pass Ican, nothing stops you from passing all this technology. You don't even need a jam or any other thing. There are different, some of them, technologies, you learn it online. You have your YouTube, you can download your YouTube and learn some of this technology. Some of this, majority of this technology on apps that can teach you how to do a lot of apps, they are on the YouTube. Download them and make use of them. The chat box, the AI is there on your phone. You can use it to do a lot of things. And then, as a result of doing a lot of things, you know that, yes, you are complying with what is expected. Because digitally, if you want to be transformed, it will help you to do what? It increases your efficiencies. It improves your ability to make decisions. It saves your costs. It increases everything about you, and it makes you a better accountant. And today, we've seen it that there are a lot of principles, general accounting principles that we ought to know in the accounting and financial reporting sector. And once we know this principle, they will help us to do what? To prepare our financials and to manage our financial statements in terms of statement of accounting, statement of profit and loss, and other comprehensive income, financial position, cash flow, and a lot of things like that. And when they manage it like that, they will manage it in such a way that it will be what it is expected, because what is required is that we need speed, we need accuracy, we need professionalism. But unfortunately, when these things are done manually, it doesn't give us the desired result. The next option is for us to do a transformation. And when we do this transformation, the next thing is to do what? To see the need for transformation. But the most important transformation you can do is digital transformation. And the digital transformation can come in through what? Through the deployment of blockchain, AI, and artificial intelligence. And we have seen that blockchain will help you to do what? To encrypt whatever resources you have in such a way that there will not be problem with it. While AI will answer all your needs and will give answers to whatever you need and help you to take a decision. And in doing all these things, you'll be able to do what? To be digitally transformed, because you need to do a lot of things as far as financial reporting and others are concerned. Because as an accountant, you will need to do audits, you will need to do financial reporting, and you will need to do financial services delivery. But in doing this financial service delivery, you will need an input of what? Digitalization. And digitalization can come in through chat boxes, through AI deployment, through blockchains, through machine languages, and in order to you. And not only for you to adopt this to a company, but for us to learn how to develop all these so that we can put it to our own accounting and financial reporting process. And once we do that, we can be sure that the digital transformation will improve everything that we want. The next slide, please. The last slide, please. The next slide, please. The next slide. Thank you for listening. I know it's been a wonderful time. You have listened so much, and we have done a summary of what we have learned today. And I'm sure at the end of everything today, every one of us should be a digitally transformed an accountant, in which we are influencing our company, we are offering the best services to our customers, and we are developing apps and packages that people can buy in order to transform the accounting process digitally. Thank you. Thank you, and thank you.
Okay, thank you very much, Doctor. Thank you so much. I don't know if anybody has question. Thank you so much for this in-depth and insightful paper. I don't know if anybody has any question so that we can release Doctor. Thank you so much, Doctor. Any question? I'm checking the chat box if there are any question. I think the doctor has answered some of these questions. He has answered the one on the blockchain and machine language. Doctor, there's a question
Hello,
here. He said, thanks a lot for your insights. Yeah, doctor, they said there's a question here that talks about acquisition of machine language and blockchain. He said, where can we get the machine language and blockchain tools and how to use it? Give us a practical guide on how to acquire and use these tools after attending this program. I remember you said something about retraining and training and retraining.
Yes, thank you very much. Though I've answered the question, but I will also put a little light into it that we have a lot of companies who are offering these services, and there are prepared machine language, blockchains, and all the other accounting processes which are digitalized. In addition to that, there are softwares on the internet that can be used in order to do all this. You can go online on your Google and your search engine, and you will get them. In addition to that, we can also get knowledge about them, because I said one of the most important things is that all these things are not limited to us. You can get trained on how to write programs, on how to do coding, on how to develop apps and packages for accounting that people can buy. So you can learn a lot of it through YouTube. They are there on the YouTube.
Thank you, Doctor. From the things I'm getting, I mean, a lot of comments coming in, web research paper, the energy in your presentation, and the passion. Thank you very much. Well, this question, the doctor is a fellow accountant like us. He's not a programmer, if I'm mistaken, because somebody is talking about brief development towards developing apps. I think that is more for a programmer. So it's more for a programmer. When you are taking us into the level of talk of app, is more of the role of Okay.
What I've said. Okay, thank you very much. What I've said, majority of these programmer, majority of these app developer, they are not angels. They are human beings like us. We can also learn it on how to develop apps and develop packages and programs. And it's very simple for you to do it. Go online, go to YouTube, whatever language you want to develop, whichever way you want to be writing programs and be a programmer, you can be taught online. If we have the strength to pass our Ican, we also have the strength to learn all these languages, which we can use in writing the languages. And once you are able to write the languages and you are a programmer, the majority of accountants that I know, they do CISA, they do a lot of things, they do a lot of programming, and they are the one writing. It's a challenge to us in the new world that an accountant is not just going to write the books only. You must be able to program, how to write, how to develop, how to report your books also. Thank you.
Doctor, I will not leave without making this comment. One of our past chairman has requested that we should book you for a future day. That is in the person of Chief Ralph Ayama. Is one of our past district chairman, not just our district chairman, is part of the board of patrons of this district. So he has said, you know, we are using this opportunity to say, doctor, when next we ask, you will have to oblige us. By that mandate, I'm taking that mandate from as chief has given me the permission that we are looking at a future date. So, doctor, when we call on you, please have us in mind. And we've gotten the request of our past chairman and also our patron on this matter. So that means the preparation was the lecture was really impressive. So we want to take it that, doctor, you are on our list to anytime we need your presence, please oblige us. Thank you very much.
Thank you very much. Another area that's
yes,
I'm going to say do is on cyber security. You know, I spoke briefly about it. That in our world, you know, I said I was doing an ICFR for a company, and I was asking them about their they have a good presence in the cloud, and I spoke to them about cybersecurity, and they said there's nothing. Then they didn't have any policy on that, as if they cannot be attacked. And for every accountant, you must be, no matter how small your data are, it can be attacked for one thing or the other. So we look up to the future, which will talk more about cybersecurity. It is for everybody. It's not only for the banks. Thank you.
Okay, sir. Thank you. Doctor, there's a question here. He said, doctor, in the US, most students are moving away from accounting to finance and IT. How do you see the future of accounting profession in Nigeria?
Thank you very much. Yes, we have said a lot about accounting. And, you know, I've said something today that as an accountant, if you can pass Ican, there is nothing stopping you from having knowledge of programming so that you can use it to develop apps and packages that people can buy. Truly, people are moving away from a particular, nobody is moving away from accounting. I want to correct that, because nobody is moving away from accounting. You need the knowledge of accounting to develop your IT and your packages. What they simply do is that they don't do more of accounting. They will get an accountant to give them a profile of what they need. Then, because of their prowess in IT, they will now use it to develop the IT, to develop the packs, develop the machine languages, and sell back to you as an accountant for you to operate. So why not you learn about that program? You are at advantage. You are at advantage position than them who did not learn accounting before, because you already learned the accounting. There are some programs you will be writing. If you are not deep in knowledge of accounting, you will not be able to write those programs. So we already know the accounting processes and procedure. All we just need to do is to familiarize ourselves with the IT and programming level, and then we are good to go. We can do better as an accountant.
Thank you very much, doctor. Thank you. So we are holding you on cyber security. So at the appropriate time, we'll come and take that. So there's a deposit already with the blessing of our past chairman and patron. So we have gotten one. Thank you very much. At this junction, if there is no other further question, yes, doctor, your contact, I think they are in your. Doctor, I hope your contact, people are demanding for your contacts. I hope it is on your slides so that we can, they can.
I'm putting them.
Okay. So once we have it, so that it's always that the most important thing is about the, so that good. Your question has been answered. The doctor has put his contacts on the group chat, the email, the phone number, so that I can always get in touch with him. Thank you so much. Thank you so much. Thank you so much. At this junction, I want to welcome if there are no further questions, I want to invite our district vice chairman, the person of Mr. Aziz, to give a vote of thanks. Doctor, the comments have been wonderful. Thank you very much. I mean, the people are really impressed. Thank you so much. It's really value for time and investment. We have said it. The fee is not just the people lecture, but is the investment. This is a worthwhile investment. So I hand over to Mr. Aziz to give a vote of thanks. Thank you very much, Doctor.
Thank you, Mr. Tony, for the moderator. From Doctors Shadari, if you have strength to pass Ican, you should have a knowledge of programming, which is awesome. Thank God for this webinar. It's an opportunity for each of us participating. Let me appreciate the two speakers, Mr. Olumide Lawson, FCA, CIA, FCA, and Dr. Shadari Oluwasegun, FCIB, MCIB, ACA, MNI, MCIPM, FCA. Both of them keep to the time. We thank you for the in-depth knowledge of the choosing topics, and you have done justice to the two topics. And we are looking forward, as our past chairman have said, our patron, that we still need your lecture on cybersecurity. I hope when we call you, we oblige to our request. Then let me thank the chairman of the district giving the opportunity, the past chairman present, and the ESCO member, all participants. We say thank you for your time and for the money value you spent. Thank you all. Over to you, Mr. Moderator. Tony.
Thank you very much. And to all participants, we thank you very much. You will know that it's our trademark in Lagos Mainland District Society, the flagship of all districts. Our webinar are always top notch. Always top notch, and our resource persons are always exceptional. So we thank you for honoring this. And as we said, for every participant that attended, you will get your certificate of attendance. You also get the lecture materials and the credit hours for members of Ican. We've already even started the process before we've gone far to start the process so that there won't be delay. So we've already gotten Ican. In fact, they are also here to attend this workshop. So be rest assured that all the needful, the credit hours, the certificate of attendance, and the lecture materials will be distributed for everyone. Just ensure you register. Just ensure that your name, your phone number, and your emails. Then for members of Ican, because there were also lawyers who participated in this workshop, so they are not Ican members, but lawyers. They participated in this workshop because of the contents of what we're talking about. But for every member of the institute, your credit hour is assured. So I want to thank you, and we look forward to a future workshop. The time is about 5 to 2. Our plan is to close by 2. But one thing is certain, keeping to time. Thank you so much. God bless you. Have a great, great day. All the best. Bye-bye.
Bye-bye. Thank you.
Yeah.
Yeah, bye. Thanks, Tony.
Bye.
Thank you very much. Thank you,
Thank you,
everyone.
everyone.
You're welcome.
Bye-bye.
You're welcome. Bye.
Yeah, bye-bye. Thank you, everyone. Bye.